We are like Nagla. You can go ahead.
Ready to go?
Yeah.
Hello and good morning, everybody, all my friends over there on our virtual meeting for the second annual meeting for EMGN. Yes, friends, yes. Really missed you, missed being physical meeting with you. And we were hoping that our second annual meeting will be a live one. Unfortunately, we could not make it due to the issue of the pandemic that we dreamed last year it will disappear and vanish, kind of, but not fully. So we are at least happy to be able to meet virtually. So thanks to technology and digital. And yes, it is our second annual meeting as EMGN. Surprisingly, we survived. We survived because EMGN was born actually kind of with the start of the pandemic. This survivor and continuity, and not only continuity and surviving, is also being so active across the last 2 years, is proving an important fact of how important these networks to our business and to our nature business, where we are kind of unique business and we really count on each other to understand, to think and to create and to learn and to invent and to affect the whole industry. So yes, we survived and survived beautifully, despite the whole surrounding that we are around actually. Within this year, of course, and while we can say, well, mist of recovery or crossroads between pandemic and heading to recovery, or there are lots of uncertainty we are surrounded with, but there are lots also of positive things that are around us. The important thing actually that we have to we need to highlight and we're talking about today actually across the 3 sessions that we will go through is the future, talking about the future. And we have to look to the future despite all these changes and drastic changes and uncertainty around us. We cannot just stop to react. We reach it to the time where we have to start acting and take action to meet what started to show across 21. 21 actually was not an easy year as per 2020. There were lots of speculations about 21. By end of 2020, most of economists, policymakers, and all, they were expecting slow down of the pandemic, maybe end, maybe whatever. Expected lots of things, stabilization of the inflation rate, lots of things. Unfortunately, that did not happen. And pandemic continued. We had the ups and downs. And effect of the early lockdown started to show. And this is to show, okay, negative, but positive in terms of we have at least the ground from which we can start to prepare ourselves to meet all these effects. Economists actually had shown during the year 2021, and here we're heading to, definitely had shown negative and not positive results. We started to see, and we confirmed the increase in inflation rate. We're seeing actually the effect of lockdowns on supply chains and how the whole global trade has been affected, and the effect of that on cost of lots of goods and services, as well as the wages. We've also witnessed a shift in markets towards new trends, or not shift actually, it's realization by the market for new trends like the effect of climate change, and now we've seen actually the increase in cost of energy. All of this, of course, had the effect of on economics. The good thing is that we had another good in parallel to that, vaccination proved effective and had been spread all over the world, and of course controlled the virus So at least we're not having a life-threatening virus. And we can all tell that we're heading to life to go back to normal as life. But how that will affect us, sitting on the seat of the risk mitigators and banks and the policy and physical and monetary strategies and policies. Monetary and physical strategies actually were acted in an exceptionally excellent way to kind of stop an immediate effect on economies upon the surge of the pandemic. And this pandemic is not like any, this is a pandemic that we've never encountered, within the last crisis of the financial crisis of the 2008, it took like economies, 7 years or something, on average to back to almost near normal. Effect even of the financial crisis was not like this global, humongous effects in business and households. It's not like any. Yes, it's not like any, and its effect will never be like any. And actually, our recovery journey will not be like any. It will be a tough and steep recovery journey. And we have to confront that now to be able to meet what's expected ahead of us. We've seen through the policies, actually, as we said, the policies, monetary and physical, beautifully work together to come up with initiatives and regulations and a lot of things across the 2 years. And they've never stopped. They have been acting spontaneously against each drop or effect. We've seen physical policies, we've seen central banks talking about facilitating access to finance, facilitating even money to people to cover their unemployment status, access to troubled sectors, access to us, to more resources to cover or to enable banks actually to go into all these risky zones, without even, we calculated, but what are we calculating? We calculated what we know, but we're still having this black swan that we don't know, so we have to be ready for all of this. So in reality, all of this, we've been very spontaneous. Also, we as guarantee schemes have been very, very spontaneous in reacting to what is requested. What more than this risk to mitigate, and what more are we going to save more than our economies? So the good thing is that we had a very effective role in saving and continuing in saving economies for the coming period. And at the same time, we were, we were all passionate about what we're doing, because during those 2 years, and due to all these closures and lockdowns, I'm just virtual, but I met with most of you more than I could meet, in normal cases. So we're constantly interacting, we're constantly talking, sharing, discussing, and doing lots of things together, which I can tell from what I've seen from all the people I talk to, and I'm talking to everybody within the industry, from Asia, from South America, from Europe, from Africa, us, everybody. There was a passion behind what we are doing. We were very passionate about what we are doing. We did not save a minute, to give, to enable us, to think about a new product, to think about something in the market that we need to work on. Yes, our regulators are coming to us by ideas, but we also went to them by other ideas, and that was new in what we're doing, because we felt the market more than anything, we felt the people, we felt what we're heading for. We understood, how crucial what we are in and where we are heading. And as I said, as a risk mitigator, we cannot but be there. But this passion associating our work resulted in us being able to serve the unthinkable of, we've never thought about getting all those defaulting, for example, companies or corporates or whatever, to be guaranteed while they are defaulted. We'd never thought of presenting guarantee at 100% coverage or maybe at a no fees. We've never thought about things like that, but we did it. And we are trying now to think about how to work within its effect, because nothing will continue forever. There will be a stop. Even the policymaker, the monetary, the physical policies, with what they granted at the beginning, and they were capable to save our economies a lot, they're not going to continue as is. There will be no blanket coverage often. There will be specifics. And we know, as risk mitigators, we know what we're heading for in terms of increase of NPLs, within the portfolios that we are covering. We see lots of even moves. Here are Basel II opening the line for all banks, for example, to relook their application of IFRS 9 and staging, because that by itself can tell you how things moved from stage 2 to 3, and how they are allowed actually to unlock this by delaying maybe. Each central bank is working on an initiative or another. However, we have also trends, the climate change, drastic effect on our economies, and we can see it, and if there is any risk assessment or mitigation policy will not incorporate components of climate change, I don't think they will be able to deal with what's coming. The talks in the market all over, starting from top down, starting from policymakers, regulators, banks and others, talking about only one thing: reform, to be ready to the tough recovery journey. So reform, and this word reform and restructure and transform, or whatever it is, it's a big word, but it's the fact that we are in. To do that, we in 2021, I think most of us, we kind of step back, we kind of step back to look where we are, so we can plan to what we are heading. And when we looked at where we are, we can tell with all these indicators appeared across 2021 that, as I said, still, we cannot deny the fact that the toughness, stiffness of the coming journey. So this is a fact. How are we going to deal with that? We cannot deal with it as we are. And we cannot deal with it with the projects that we are working on. We cannot. We have to completely think out of the box. We have to reform ourselves, restructure ourselves. Actually, EMGN during, and I believe AECM and Rigara and others during the other networks, during year 2021, we've been doing lots of academy training, thanks to our partner GIZ, and we were doing, among those, we were talking about the restructure, the reform, the new business model, the remake of our model. We talked about risk assessment. We talked about how to think about the unthinkable, and even if it was a black swan, now it's a white one, so we see the swan now, and we can tell what we are heading for. So we cannot just hide from that. So reform and restructure and thinking about how to go with all these challenges, and how to turn all those unpleasant, ugly effects to challenges more than this, and how to deal with them. Will that affect us financially or operationally? Or yes, we will, but we have a good momentum of being supported by our policymakers, in all countries, we've been supported magnificently by all of them. And I believe it's our momentum now, because this is where the effect is coming. We were kind of standing, issuing guarantees, increased. Europe, I believe, increased by like 200% consequently across 2021. The South Americans, 300%. The MENA region is like 100 something percent in terms of portfolio. These are all issues of guarantee. Yet we know that our balance sheets, our default ratios are not yet affected, but they are coming, because we cannot continue giving all these relaxation spaces and the blah, blah, blah. It will end at a certain time. Insolvency will appear. And how are we going to deal with this insolvency? And how are we going to deal with it? Applying different products and different models, because it's not a one model suits all. No, it's not the case. You will find those corporates that have been taking maybe painkillers, or you can take, they talk about what? Zombie finance, because this is the word, they are taking zombie finance, during the last period. But we have to face the reality. Zombie finance cannot continue forever. We have to stop and look at realities. How are we going to deal with that? As I said, no one model will suit. We have to work on credit. We have to work with equity. We have to work with bond securitization. We have to identify the nature of the NPL portfolio. We have to look at that and see what this NPL portfolio looks like, what's expected from us here. All of this identified new roles and renewed roles for the guarantee schemes with what we're heading for. And as we said, 2021, we thought all about digital and whatever, we started to do our digital strategy. Most of us, either we are ahead of the curve, or we are in the middle, or we are at the beginning. We're heading there. We're all going to this digital application, but digital, resilient, agile. Okay, but where are the models? Where's the models? What are we going to do? And these risks could increase to unprecedented numbers in our portfolios, at least. How this will be dealt with? Yes, governments are on our back. Funds or letter of commitments or whatever are on our back. But this is the market. How are we going to pull the market? How are we going to assist this market to stabilize? Because this risk spread and not met except by covering the risk and increasing the defaulting client ratios and rates without finding solution to those defaulted. I think actually we are in trouble, governments are in trouble, and banks are in trouble. So because it falls within us, so that's why the new model should incorporate not only financial, from my point of view, not only financial aspects, but also non-financial. And why non-financial? Because there is this area that we need to work with the business. We need to work with them. We need to work with SMEs. We need to help them. We need to help them find other ways of continuing their business. We need to see which model, which product that we are going to present is heading there. And the name actually of success in the coming period for the guarantee scheme is remodeling and rechanging your model based on digital, yes, but look at diversifying your products. Be very close to the market. Advance your risk management system, because this is not any risk management that we've been working with before. No components inside this risk management are still weighted at the same weight as before. So we need to revisit our components, our risk management, incorporating the new. We have a very challenging year, 2022, ahead of us. 2021 was very challenging too, but the good thing, I think, we ended the year being clear about how tough the recovery journey will be, about some highlights of the market effects, identifying our role. So 2022 will be working our role to be ready, when this will be on the ground. So I'm happy that this EMGN second annual meeting came very momentally, actually, to address issues very important. And these are the sessions that we're going through. We will be going across, how the sector, the MSME, have been affected. We will be going for a special session, clearly identified and talking about the business model, and then we'll head from there to the increasing the resources, because and how to do that with new techniques might not be actually the same technique that we encountered before, like in the MENA region, for example, we don't have counter guarantee. So this is what we are examining. And the beauty about that also we are aligning with different bodies, so EMGN is not only EMGN is ECM, is Rigara, is MENA, is all our supportive bodies around, helping us, to kind of reach to this solid situation, to be able to start this tough and steep recovery journey that we're heading for. So in reality, I am looking forward, and I'm sure that you are all looking forward, to go into these sessions, where actually we have a number of friends, because we've been talking, everybody there, we talked during the year like 12 times, 20 times, whatever it is. When I have a problem, I call, here is Jose, here is Beatrice. I was over the phone with her, just shortly discussing discussing all the products, Virginie, Pietro, Kalisha, and Masha, so everybody. I'm talking Humam and our colleagues in Yemen. We met here, you know, they came to us here and we talked and we discussed that and we exchanged our friends Yusra and Dr. Hamidi from ANF. So we have lots of people and we have, you know, the whole body is supporting, and this is very important that we have I have to end that by thanking all the supportive body who believed in the EMGN, starting by the UFM, who've been behind the establishment and believed on this dialogue, on this integration, which falls within its core objectives, you know. And we started that like 2009 and 2008, 2011. They've never actually kind of stepped back or did not believe. They had the belief and kept supporting until this network show actually would see light. The most important thing that we're heading to have the label under UFM shortly. Our colleague from IEMed, Roger, actually is working for that, and thanks for Roger actually, and thanks for Antoine, who'd been organizing, you know, this meeting and taking it from live meeting to virtual meeting to God knows what, changing the whole structure more than once, talking to people. I know we give you a hard time, Antoine, but thank you very much. You did a brilliant job. Thanks for EMEA, and thanks actually because with the coordination unit, you know, they were behind lots of activities that we did during 2020 as an EMGN. And thanks to GIZ for supporting all these activities with us, you know, and thanks to, and go especially to the members of the EMGN who believed in the EMGN, who believed on how important our gathering under one umbrella, and they had been active in participating all the activities and supporting actually this network who'd been really born in the middle of the pandemic, but continue proof of the real need of these networks. Thanks to our colleagues at AECM and Regard, we shared their annual report, we shared lots of experiences together and always overwhelming them as usual, because I think our friend Khater from Lebanon, he's always telling me Mishkal Jia, the one with problems. So I used to send all the problems, you know, with our team and the Catherine and Gay in the AECM and the others, you know, sharing thoughts, brainstorming, talking about issues. And thanks, in Egypt, we do not fail to have issues every hour. Not every day. So it's always a kind of a dynamic, and we needed all this thinking and all these thoughts. Thank you. Jose, I had a call with him like an hour, I think, Jose, one day. We were talking about structures and whatever it is, and I was just talking, you know, so maybe he was in the middle of a meeting or something like that. Sorry for it, but thank you, everybody. Thank you, everybody, you know, because if I'll say the names, you know, will not end, or I'll maybe end by 2:30. So this is the end of the whole day. So I will say thank you to everybody because you've all been very supportive, really brilliant people. We're heading to the most challenging timing I think we've ever met, at least in my career I've ever met. You know, so I'm taking this year very challenging at the level of the institution to me personally. So in reality, I really, and I'm anxious to do that, you know, so, and I'm counting on all these support around us. Thank you, everybody. And it's really great to have the second annual meeting with you. Okay, virtual, at least we could make it. Inshallah, next year, it will be, not next, end of this year, inshallah. It will be not virtual and here in Egypt, yes, inshallah. And thank you very much, everybody. Antoine, thanks again. With a marvelous job. And now, actually, I'm passing, I believe Antoine will pass or will give the floor to the word by Ambassador Nasser Kemal, Secretary General of the UFM, the godfather actually of the EMGN. And thank you, UFM, for all what you did. Thank you, guys, and the brilliant, interactive, challenging, everything day. Thank you very much. Thank you.
Excellencies, ladies and gentlemen, I'm glad to contribute for the second year to the EMGN Annual Conference as a mark of the Union for the Mediterranean's commitment to support the Euro-Mediterranean Guarantee Network. EMGN is one of the most relevant initiatives to support self-entrepreneurship and employment in our region, the Mediterranean. It also helps promoting regional integration in our region. This brilliant initiative, promoted by three close partners of the UFM, namely the Euro-Mediterranean Economists Association, EMEA, the European Institute of the Mediterranean, IEMed, and of course one of our very strong partners, GIZ, is currently in the process of carrying the official UFM label in the upcoming month. We are particularly proud of this project, which saw the day in 2012, ensuing several meetings from 2011 to 2013 that were held at the headquarters of the Secretariat of the Union for the Mediterranean here in Barcelona, and involved the CGSs representatives from the Southern and Eastern Mediterranean, the European Guaranty Association, as well as our own UFM experts and officials. Today, in the context of the pandemic, this initiative is becoming even more important, especially in the Southern Mediterranean countries where there is a huge room for improvement in terms of financial development and financial inclusion. The role of the Mediterranean CGSs has acquired an added value to help economic recovery in the region by securing liquidity and credit influx to maintain jobs and avoid fragmentation risks, as well as by boosting sustainability in the region and closing the gap of access to finance to micro, small, and medium-sized enterprises. This last point on MSMEs, access to finance, was highlighted by two Ufm Ministerial Declarations. One was the declaration of the third Ufm Ministerial Conference on Industrial Cooperation in 2014, and of course the Ministerial Declaration of the fourth Ufm Ministerial Conference on Employment and Labor that took place in 2019. I would like to recall also that the UFM organized a workshop on credit guarantee schemes in the Euro-Mediterranean region here in Barcelona on the 16th of September 2019, again in partnership with the three promoters of EMGN, which I mentioned before. This workshop gathered high-level representatives from both Southern and Northern Mediterranean credit guarantee institutions with the aim to decide on the step needed to launch this EMGN project in 2020. In view of all of these elements, let me assure that the EMGN is one of the most relevant regional initiatives seeking to alleviate the region's structural constraint in access to finance by gathering guarantee schemes active in the countries of the Euro-Mediterranean Partnership around closely related objectives. Ladies and gentlemen, we believe that together we can make a great story of success. With the financial support of GIZ, on behalf, of course, of the Federal Ministry for Economic Cooperation and Development of Germany, BMZ, the UFM launched and successfully delivered a grand scheme for employment promotion as a regional response to the COVID-19 pandemic. The UFM is also actively supporting non-profit organizations in the Mediterranean that works to give people opportunities in view of the COVID-19-induced economic crisis. It focuses on projects that enable people to find jobs, continue to gain a living, and improve their work and living condition. At the same time, we seek to support projects that encourage entrepreneurship and improve the business climate for MSMEs as crucial providers of employment in the Mediterranean region. Without further ado, I wish you all a fruitful 2 days of exchanges and discussions, and I assure you that the UFM Secretariat will take good note of your recommendations and takeaways and will develop more interaction with all concerned parties related to the Euro-Mediterranean Guarantee Network. Thank you very much.
Well, thank you very much, dear Secretary General. I take over from there to welcome this first introductory session, but allow me first of all to thank our dear President Nagla Bar for her words of encouragement in such a difficult period of time that we are still going through. And I would also like to warmly welcome all the representatives of credit guarantee institutions, international organizations, international financial institutions, as well as other attendees who have decided to join us today in big numbers, because I see that we are more than 100 people joining this second annual conference of the EMGN. To be honest, I'm delighted to moderate this first session of the annual conference with so many prominent speakers, our dear panelists, whom I will present to you right away. As our president said, Nagla Bar, we would have wished to hold the second EMGN annual conference in Egypt. In fact, it was a pledge that we made a year ago during the first EMGN annual conference. And in fact, we started organizing it in Egypt not long ago, but Omicron attack again and prevent it, which I will, and I of course sincerely regret it. But indeed, there was very little we could do with this new variant. Since we launched EMGN a couple of years ago, even though the inception works started many years before, but we launched it a couple of years ago, we have been forced to hold all events online, virtual, with the sole exception of the very first ones. And we're still there. And I think that this is, I know that Nagla already highlighted, but I think it is important that in this very difficult and challenging environment, for 2 years, we have kept working month after month to keep this network alive and to deploy a set of activities. And now that we are, let's hope, at the end of this Omicron wave, we all hope, as Nagla said, that we will be able to resume our face-to-face events very soon, and therefore the next annual conference by the end of the year will be held physically. This introductory session will be about SMEs' access to finance in the post-COVID-19 Mediterranean, at a particular moment where governments try to promote sustainable, inclusive, and resilient economic growth and development that creates long-term employment in the southern Mediterranean region. MSMEs, micro, small, and medium-sized enterprises, should be the backbone of any strategy. Let's be clear on that. We will not be able to create long-term employment in the region if MSMEs do not get the right attention and are not able to thrive with the right environment. MSMEs, as you know, represent on average more than 95% of the economic tissue in the region. MSMEs create 2/3 of the employment in the formal sector in the region. But at the same time, MSMEs face severe troubles, challenges, constraints aggravated by the economic consequences of the pandemic, such as difficulties to access to finance, such as difficulties to go international, to be internationalized, such as difficulties to take advantage of the insertion into global and regional value chains, or even such as difficulties to operate in the formal sector. We have been talking a lot about the challenges and the constraints that MSMEs are facing for many years now. And for sure, the credit guarantee industry has been instrumental to improve the situation, to alleviate part of the credit restrictions that MSMEs have to face. Of course, The situation is very uncertain. Of course, the situation imposes to rethink, to innovate, to reshuffle, to reform, as Nagla was actually saying. But yet, whatever form the credit guarantee industry adopts in the Southern Mediterranean, there will still be the need for a strong credit guarantee industry to intermediate, to intervene in the market, and to help MSMEs. And that is where we step in as EMGN to accompany, to assist the credit guarantee industry in the Southern Mediterranean, and in this process of change in a context, turbulent context of uncertainty. So let me move straight to present our dear panelists. We have, well, three speakers in this first introductory session. The first one, whom I will give now the floor, is Abdelkader El-Kisasi, who is the Deputy Secretary General of the Union for the Mediterranean in charge of the economic development and employment. Since July 2021, Dr. El-Kisasi is a Moroccan diplomat who was seconded at the Ufm Secretariat in Barcelona, senior advisor responsible for the youth and civil protection dossiers in the Social and Civil Affairs Division. And after that, he became the Deputy Secretary General in charge of economic development and employment. Prior to that, Dr. El-Kisasi worked in several positions at the Moroccan Ministry of Foreign Affairs, but lately as political advisor in charge of relationships with the European institutions. So Dr. El-Kisasi, the floor is yours for 10 minutes for a general presentation, then we'll move to the other two speakers. And finally, we have hopefully some time for debate. Thank you. Over to you.
Thank you, Roger. Good morning, and thank you, Nagla, also for the invitation. Thank you, EMGN, for this invitation to this important and relevant meeting to discuss the access to finance for MSMEs in the post-COVID-19 in the Mediterranean region. So I want to insist on our special relation with the EMGN as one of the most relevant regional initiatives involving three of our eminent partners, which are IEMed, MEA, and GIZ. And hopefully we will have this project very soon labeled by the Ufm, as I believe that we have all the conditions to have it. And we deem this discussion as essential in a context where the COVID-19 is unfortunately still making too many damages to our societies, including at the economic levels. I can begin with the first question and to confirm what our Ufm Secretary General appointed earlier in his message, that at the Ufm we strongly believe that SMEs access to finance is definitely crucial for the socio-economic development of the region. Why we have this conviction? Actually, micro, small, and medium enterprises, MSMEs, constitute the backbone of economies across the globe. And in fact, they represent about 90% of formal and informal firms globally, and on average accounts for about 70% of employment and contribute with about 50% to GDP. So small businesses are therefore vital to ensuring the livelihood of a huge number of people and play a key role in achieving the 17 UN Sustainable Development Goals, notably SDG 8 for decent work on and economic growth, and SDG 9 industry, innovation and infrastructure. So more generally, in emerging markets, most formal jobs are generated by SMEs, which create 7 out of 10 jobs, which demonstrate the importance of MSMEs growth as a key point of the strategy for employment. And they are recognized in a larger geographical area than large businesses, even in the vulnerable areas. Hence, they perform a key responsibility for increasing income development. But also, as a regional organization, we can observe that MSMEs are the key players, given that they represent the vast majority of all firms in the Mediterranean countries. In Southern and Eastern Mediterranean countries, MSMEs are employing for between half to 3/4 of total employment. So as a gate of employment, economic dynamism and competition and progress, the impact of SMEs on the economic growth of our countries and region is certainly substantial. Regarding the first part of the second question, focused on the main challenges, I can say that MSMEs in general affront several barriers to access to finance, unfortunately. This is why governments and policymakers consider in general as a junior priority tackling this challenge. It should be noted that MSMEs get limited access to bank credit guarantee, as well as they lack access to alternative sources such as equity, given that in general they fail to meet the strict requirements related to governance. Unfortunately, the COVID-19 crisis and the lockdown measures has aggravated the issues by severely affecting small firms in terms of value chain disruption, decrease in business activity, financial instability, consequently increasing the risk of their insolvency. Even worse, the pandemic crisis and the impact of the pandemic has proven to be irregular, attacking harder our region and within the same country. Some sectors such as tourism and services and MSMEs led specifically by women and youth. I can mention at this regard that an international trade center survey on COVID-19 impacts among businesses in 136 countries has found that nearly 62% of women-led small businesses have been strongly affected by the crisis. And in fact, many barriers continue to deter the development of MSME, inferring that part of their potential for employment creation, which remains unexploited. So SMEs in the Mediterranean region and all around the world have been especially vulnerable to the negative impact of the pandemic, as they are more labor intensive than other companies, and therefore they have been more exposed to disruption, especially when workforces are in quarantine. Moreover, we perceive that MSMEs have been more exposed to liquidity squeeze than other firms during the COVID-19 outbreak, as they hold softer liquidity reserves. Thus, there are, of course, several other reasons for MSMEs and their performance, like the sterile business environment, restricted access to finance, the poor entrepreneurial culture, ability, and ambition, the very limited regional MSME engagement in exports, internationalization, and global value chain. Also, the general informality with low quality jobs, no social security, and finally, the political instability. In fact, the MSMEs in the region have a large financing gap, and numbers of the firms, especially MSMEs, are excluded from bank lending in the MENA region, where a quarter of the firms rank access to finance is considered as one of the most important constraints to their growth. Also, the financial inclusion for MSMEs is very critical for their growth and productivity, job creation, and economic development at the country level. So this is our remarks, but also these facts are obvious, and we work to find collectively good and specific solutions to the region. Thankfully, some governments in the Mediterranean region have quickly set in place some urgent solutions to support MSMEs through several initiatives, including the job retention schemes and debt moratoria and loan guarantees. And in the long term, they are also working to set up more conducive strategies aiming to make MSMEs more resilient to shocks and able to thrive by focusing on innovation to come up with new ways to improve MSMEs' access to financial services, including the bank credit, equity funding, and insurance, adopting digitalization means of continuing business even in times of shocks such as the pandemics, and developing investment that contributes to enabling smooth transition towards more sustainable, greener, and inclusive economies. To do so, it's very crucial to deploy multi-stakeholder efforts, bringing on board governments, international organizations, financial institutions, policymakers, private sector, and academia and think tanks who should join hands to explore ways and means to broaden access to finance for MSMEs. So within this framework, we recognize that EMGN initiative is an example in what relates to fostering dialogue and peer-to-peer learning among relevant stakeholders in the region to exchange best practices and produce much needed expertise to better apprehend the financial needs of MSMEs. By the same token, and in line with its core priority areas of action, the UFM constantly works for creating an enabling environment for MSMEs to thrive, including through improving access to finance. And in this regard, I can mention as examples among others, the following, as we held the UFM conference on 25 June 2021 to showcase pathways for supporting MSMEs on in navigating the COVID-19 pandemic and achieving a sustainable economic recovery. And I can mention also the flagship initiative Made for Jobs, which support over 800 MSMEs in the region so far. And the issue of access to finance for MSMEs is part and parcel of the work program under the UFM regional platform on industrial cooperation for the period 2021-2024, as it was the case for the previous period. In this context, we accomplished that the role of Mediterranean credit guarantee schemes has taught an added value to help economic recovery in the region by securing liquidity and credit entry to maintain jobs and avoid fragmentation risks in the society, but also by boosting sustainability in the region while closing the gap of access to finance for MSMEs. As a result, we fully believe that beyond the COVID-19 crisis, CGSs are very crucial to alleviate the region's structural constraints for MSMEs to access to finance, and then the credit guarantees have already proven their importance during the pandemic as a main channel for government intervention in the credit sector by using guarantees to encourage banks to continue lending to MSMEs. Finally, policies to enhance MSMEs financial inclusion involve especially introducing innovation in SME finance, such as promoting the digital financial services, investing in enhanced financial literacy for the low-skilled, and setting up and improving the guarantee schemes for MSMEs. So without further ado, I would like to wish you all the success in this event and the organization of this important gathering. And more broadly, in pursuing the implementation of the EMGN initiative, and hopefully we will have it as soon as possible and one of the UFM labeled project. Thank you, Roger, and we'll continue the discussion.
Thank you very much, Mr. El-Kisasi, for your words of encouragement, for supporting us. You know that more than supporting EMGN, it is very important that the UFN keeps on supporting from the policy level that you do very well to the projects level. You do support MSMEs in the region, precisely for the functions that MSMEs play in the economic ecosystem in both in the northern, but also and especially in the southern Mediterranean economies. So thank you very much for joining us today. And before I give the floor to our dearest second speaker, let me remind you that we are providing simultaneous interpretation in English, French, and Arabic. So just for you to know it. And now it is my pleasure, and I am delighted to introduce our second panelist, who is Osje Demir Kusuku, who has been acting as General Manager and Board Member of Credit Guaranty Fonu, which is the largest credit guarantee institution in Turkey. She has been in that position since 2021. You know that Turkey is a very important not only player but partner within the Euro-Mediterranean partnership, and we are very happy to welcome for the first time into EMGN, and we hope not last time, this credit guarantee institution from Turkey and its highest representative and manager. So Osje, thank you so much for being with us, and now the screen and the floor is yours.
Thank you, Roger. This is Özge Demirkuzucu from KGF Turkey. I would like to appreciate EMGN for organizing such an event for gathering Mediterranean country representative here, enabling us to mutually share our best practice and local developments. I hope we eventually have many occasions to get together in person just after surviving this long-lasting COVID pandemic. SMEs in our country provide 73% of the total employment, realize 64% of the total turnover of the enterprises in Turkey, and 56% of the total exports. At the beginning of the difficulties phase of SMEs, which make up 99% of the enterprises in Turkey. In accessing finance, we can count the collateral problem, high loan cost, payment plans, and maturity mismatch, and the need for a grace period in investment loan. The supply-demand balance, which has deteriorated with the global impact of the pandemic, has led to a radical change in the workflow process of the tens of thousands of companies in Turkey as well as in the world. In order to overcome the pandemic process with the least damage, first of all, protecting the health of the employees, regulating the cash flow, and the beginning able to benefit from loans and supports play an important role. At 25% of the increases in expected in the bankruptcy that will occur during the COVID-19 process all over the world. It is imperative to develop effective strategies in this regard, since there has been a 4.3 shrinking in the entire world trade structure in 2020. The measures and restrictions implemented have affected approximately 450 million businesses worldwide. Of these businesses, approximately 232 million operated in wholesale and retail, 111 million in manufacturing, 51 million of accommodation and catering service, and 42 million in real estate and other commercial activities in the most affected economic sectors. As the Guaranty family, we stood by our SME during the pandemic process. Some of those, such as postponed check payments, guarantees we provide for loans with affordable interest as lifeline support package from companies in the tourism sector, tax debts not being sold until the end of the certain periods for loans, used with state-backed guarantees. In order to cope with the effect of the epidemic all over the world, policymakers have implemented various practices. On the other hand, central bank took steps to provide liquidity. On the other hand, measures were taken to support the household and companies most affected by the epidemic on the side of fiscal policy. To combat COVID-19 in our country, postponing tax payments, postponing the repayment of bank loans, increasing the state-backed availability, extending the majority of loans, ban on the dismissal, minimum wage support are some of the measures taken. The time period foreseen for follow-ups increasing from 19 days to 180 days. Individual and corporate customers using loans are given the right to postpone their loan principal, interest and commission payments for 3 months in case of payment difficulties. Those who face cash flow problems have been provided with the opportunity to receive a grace period of up to 1 year. Flexibly, repayment of restructured loans, the obligation to include loans that have been deferred for more than 30 days during the 1-year moderation period, or that have been restructured within this period, has been abolished until 2020 year end. The Credit Guarantee Fund limited was interest increasing from 220 million to 500 million liras, and firms and SMEs with liquid needs and collaterate deficit were given priority in credit guarantees and loan as they are adversely affected by the developments. Thus, SMEs, which have problem in loans, repayment and whole cash flow has deteriorated due to the epidemic, have been relieved financially, their credibility and records have affected negatively. Thanks for all.
Thank you so much, Ozge, for such a comprehensive presentation of the measures that you have undertaken throughout the pandemic to continue supporting MSMEs, which is a key sector in the Turkish economy. So now we move to our last speaker before we break up for questions, answers. So please do send your questions or your comments to our speakers. Who is Tahar Ben Hatira. Tahar is well known in the context of EMGN because he's the chairman and general manager of Société Tunisienne de Guaranty, Sotugar, which is the largest credit guarantee institution in Tunisia. And well, he has held several positions. Before he was Secretary General of the Institute of Financing and Development of the Arab Maghreb from 1998 to 2004, and then Administrator Expert Project P3A program to support EU-Tunisia Association Agreement from 2004 and 2008. And later on, he was finally appointed as chairman and general manager of Sotugar. So Tahar, la parole est à vous.
Bonjour Roger, bonjour.
Merci pour être parmi nous.
Très bien, bonjour à tous et à toutes. Bonne année 2022 à tous mes collègues de l'EMGN et ici présents donc à notre conférence. Donc, très heureux d'être parmi vous donc pour partager donc quelques réflexions. Merci à nos deux actives associations, l'IMEA et l'IEMed, donc, et l'appui de la GIZ. Je vais essayer de partager un écran avec vous. Est-ce que vous le recevez?
Oui, allez-y, Tahar.
Roger, vous le recevez là?
Oui, bien sûr.
Très bien, OK. OK, donc pour être dans le cadre du sujet qui m'a été donc alloué, donc les perspectives. OK. Donc, comme vous le savez tous, la crise persiste. La crise persiste et la croissance économique, elle est très faible. Les difficultés des entreprises perdurent. Les besoins de soutien donc les entreprises ont besoin d'appui et de relance et ces efforts-là sont donc leur besoin est grandissant malgré les efforts consentis pendant ces 2 années. Ce qui a été fait pour les entreprises, donc le gouvernement a mis en place des fiscales et financières en faveur des entreprises impactées. Les principales mesures sont le différé de paiement des charges sociales et fiscales, donc des reports d'échéance de crédit pendant la période 2020-2021 avec reconduction de la garantie. Ce report n'a pas d'effet sur le classement des créances en termes de catégorie de risque. Il y a une mesure de mise en place, donc une mise en place d'une ligne budgétaire de refinancement des crédits d'un montant de 300 millions de dinars. Et des crédits qui ont été bonifiés avec des taux concessionnels aux entreprises. Donc, également, il y a eu la mise en place d'un mécanisme de garantie dans un dédié au secteur touristique. Donc, plus de 4 000 millions de dinars c'est des crédits de soutien aux entreprises. Donc, parmi ces 4 000, 1 200 millions de dinars sont passés par le mécanisme de garantie. Donc, ça a bénéficié à plus de 2 600 professionnels et entreprises. Ce mécanisme a reçu l'appui d'un bailleur de fonds, a reçu l'appui de la KfW, plus de 25 millions d'euros. Donc, l'après-Covid, ça nous intéresse. Donc, la Sotugar était en réflexion avec la Banque mondiale et le ministère pour améliorer l'offre de garantie. Donc, on a essayé d'élargir le champ et les périmètres des activités éligibles. Avec une digitalisation des processus d'octroi et de gestion. Donc, avec l'introduction de la technique de la garantie partielle de portefeuille, et la mise en place d'une indemnisation à première demande de 70%. Ce projet a été un peu retardé par l'épidémie Covid en 2020-2021. Il sera remis en production au premier trimestre de cette année. Ça, c'est pour garantir les financements de création et de développement des PME. Cette période nécessite donc des opérations de restructuration, d'appui et de relance post-Covid. Donc, la Banque centrale de Tunisie, le ministère des Finances et la Sotugar réfléchissent à une nouvelle ligne de financement des opérations rééchelonnement, restructuration, consolidation des crédits des TPME. Des crédits également à des taux bonifiés. Donc, aussi les garanties des financements de restructuration avec des conditions améliorées. Donc, les quotités de garantie passent le niveau du stop loss, il est élevé également à 25% au lieu de 15 à 20%. Un coût de la garantie de 1% au lieu de, en moyenne, à 1%. Voilà ce qui est prévu donc pour le post-Covid pour les PME en Tunisie. Merci à tous et à toutes. Donc, merci à Antoine. OK, merci.
Thank you, Tahar. I think that if you switch off the translation into Arabic, you will not be listening how the translators are interpreting what you are actually saying. So just for you to know if you want to smoothen the conditions on which you speak. But thank you so much for a rather precise presentation on what Sotugar is doing to support MSMEs in Tunisia in these times of pandemic. And now we have very few minutes left. You know that conducting such a long conference in a virtual format, it's never easy. So we have established a couple of breaks in between that we would like to respect, so that participants can actually stand up and do whatever they need to do. So in order to respect this 15 minutes break, I only have like one quick question for the three of you, and this has to do with the impact of the pandemic and how you have perceived the work that you have ahead, especially vis-a-vis supporting MSMEs. So do you think that the pandemic is actually triggering the regulators, namely the central banks of your respective countries, meaning the ministries of finance and the economy of your respective countries, to give you more margin actually to develop more products to support MSMEs? Do you think that the pandemic has actually helped that? Or do you think that there is still a long way to go so that the regulators understand the need to give more margin for credit guarantee institutions and other type of institutions to step in new products to support MSMEs? So who would like to come first? Taha, is good. Maybe Dr. Al-Kisasi.
Okay, if Tahar want to speak, no problem. I can speak after him.
No, go ahead. Go ahead, I think.
Thank you, Roger. It's a very pertinent question. And I think that as a regional organization, international organization, we have limited role, we can say, but very important role to help and to promote the credit guarantee schemes also. And I think that we are trying to do our best to help several partners, including the partners promoting EMGN initiative. I think that we try draw our label also to encourage this initiative, and you know very well that in the upcoming months, hopefully we will have this initiative as one as our projects labeled at Ufm. And we need to remember also that this initiative is also related to the Ufm activities since the beginning. So I think with the credit guarantees, it's a very good way to help MSMEs in our region, and specifically to help young people. As you said before, I was working closely with young people and with women organizations, and we believe that the potential is very important, and we need to encourage them, because we don't have a work in the question of proposals or initiatives, but sometimes the difficulties are related to how to fund these projects. And I think that the guarantees could help this kind of initiatives, and could help to promote the economy, specifically in the southern and eastern countries. I think that as international organization, our role is to promote success stories, to see if we have a good experience in one country, to multiply this experience in other countries. I think that this is our role as a regional organization. For sure, it's very different than the banks or than think tanks or the universities, but our field of action is very large, and it could help us to promote these initiatives. And also, as UFM, we try to materialize our view by through actions. And as I said earlier, that we held a conference in June 2021 on MSMEs finance during and after the COVID-19. And the main purpose of the conference was to encourage countries to develop a more conducive environment, to broaden the range of available options and access to better support the needs of MSMEs and ultimately of the countries themselves. And the key outcomes of the conference include the importance of finance infrastructure as digitalization, which will be used to drastically speed up lending decisions and thus enable quick access to finance. And I think that the time is not enough to speak about all initiatives we are developing, but this is the main actions, and I believe that we will continue during the next months and during the next year to promote this kind of initiatives. Hopefully, we will have a better conditions and a better situation with this pandemic. Thank you, Roger.
Thank you, Dr. Al-Kisasi, for your reply. Now I move to Roger or to Tahar if they want to add something. if this is not the case, this is it's the first session. So it's still early in the morning for for many of us. So as we want to stick to the time given, and as we are already passing 3 minutes to the schedule, I will move now to close this session, not without before thanking the speakers. Tahar, est-ce que vous voulez ajouter quelque chose?
Non, Roger, pas particulièrement, mais juste pour vous dire que le besoin de soutien aux PME, donc le besoin de soutien des PME est grandissant même après cette période de Covid. Donc, comme je l'ai annoncé, il y a des crédits de relance à mettre en place, des crédits de restructuration à mettre en place. Donc, les entreprises ont beaucoup d'impayés maintenant. Donc, il faut donc repenser, comme l'a dit Najla au départ, donc il faut mettre en place de nouveaux mécanismes pour le post-Covid et pour l'après-Covid. Et nous avons besoin donc d'échanger nos expériences dans le cadre de l'EMGN pour répondre au mieux aux entreprises dans cette période très difficile. Je ne sais pas s'il y a des questions sur ce que j'ai donc exposé ou des clarifications à demander.
Okay. Merci, Tahar. So I move to conclude this first introductory session. Otherwise, we're going to eat the break that we are going to have for 9 minutes. So let's be back on time at 11 Central European Time or 12 in Eastern Time. So that we can begin with the new or with the next session 2, looking into the future of the Mediterranean guarantee industry, new business models for an enhanced role. So basically continuing with the words that now Tahar was mentioning, we need to reinvent, we need to innovate, we need to change to adapt to new circumstances, to new demands, to a new environment. So this second session will mainly deal with these key questions for the credit guarantee industry, and we will count with Virginie Ponce, the head of the international expertise activities from BPI France, as the moderator for this session, whom I promise to you that it will be intense. So let us be back in 8 minutes time, and let me thank once again the presentations of Dr. Elkisasi, of Osje Demir Kuzukuku, and of Tahar Ben Hatira. Thank you so much, and see you soon.
Thank you, Roger. Thank you. Thank you, Osge. Thank you, Tahar. See you soon.
Şimdi. Thank you, Roger.
Yok, açmıştım ya, gitti sesim.
Organization.
Good luck. Yes.
Oops. So yes, thank you again for the organization of the event and the change physical to digital. This must not have been so easy. So thank you very much, and I'm very pleased and honored to be here and to moderate this session, and in particular that one that looks into the future. Though things are still difficult and we are not completely out, but I touch wood, and I think we are heading towards better times. And as far as Europe is concerned, definitely, well, 2021 we had a 5% growth globally, which seems not so good for some of our southern partners, but in Europe it is it's a very good rebound after a minus 6% in 2020. So this is for a sign that we are going out of the crisis. But and this rebound was definitely facilitated, enabled by the work of the Guaranty funds and the NPBs and the promotional banks. I quote the promotional banks because both the Portuguese and Greek representatives around the table and BP France, we are also promotional banks as well as Guaranty funds. And we are we need to be prepared to this rebound, but also to face continuous risk. But it's not because we are heading for better times that the risks are slowing down, and we have to face big challenges. The first one being the climate change, and the link between the climate change and the pandemic was proved. So we definitely collectively have an immense effort to make towards improving the climate change progression. But it's not the only subject. We also have a social responsibility. But some new risks are arising. The cost of energy, inflation, the shortage of supplies. So definitely we have we have to renew ourselves. We have to constantly have new proposition to make to the banks, to the country, with the help of the regulators. And that's what we are going to go through with our panelists. And I'm very pleased to welcome Beatrice Freitas. She's the chairwoman of the board of directors of Banco Português de Fomentos. The Fomento, as I was saying, it's the National Development Bank of Portugal. And she's also the head of the president of the board of directors of the Ibero-American Guaranty Network, REGAR, and since Beatrice is the head of the BPF since 2017, but she also is the president of the board of directors of the Sociedade de Garantia Mutua de Portugal, SPGM, and she's also a member of the board of directors of Norgarant, Sociedade de Garantia Mutua, and of the Public Administration Recruitment Committee, CRESAP. And she has held different positions within the Ministry of Economy and Finance, cooperating with the International Monetary Fund in Greece and Cabo Verde. And she holds a bachelor degree in economics and Portuguese Catholic University and a master's degree of economics and public policy from the Instituto Superior de Economia e Gestão, Universidade de Lisboa. excuse me, Beatrice, for the accent. I'm very sorry. But so you have the floor to tell us what are the perspectives of PPS and the Guaranty funds in Portugal to incorporate ESG criteria, digitize services and products, and how you will evolve to propose new instruments. And if you have some time to discuss about the relationship you have with the regulators and how you will manage with them to improve those aspects, that would be great. Thank you, Beatrice.
Thank you, Virginie. Hello, everybody. Thank you for the invitation, Nagla, and thanks to EMGN for the wonderful occasion that gave us to talk about guarantees, but not also about guarantees. As Virginie, so I will go in diving into a little bit of talk about guarantees, ACG, and as Virginie asked me about our relation with the Portuguese bank that is our regulator. So as Virginie said, during the COVID crisis, we created in Portugal a promotional national bank. It calls Banco Português de Fomento, and it raised of a merging of the state companies that deliver financial products to support the Portuguese companies. This allows us to have a more comprehensive approach of the COVID crisis and fight its impact in the economy. So we merge the companies that deliver credit guarantees. So we merge the guarantee scheme with all the other companies that deliver capital instruments and debt instruments. So now, basically, we are supporting strategic companies and the industry to recover in COVID. And the Banco Português de Fomento is focusing in products both in credit guarantees, capital instruments, and environment, social governance, digitalization, and innovation. Sustainability finance is growing very rapidly, and we have an increased numbers of industries and investors and funds that are creating different investments from incorporation of ESG investment criteria. In addition of that, to focus the crisis, the pandemic also offers, and that's very important, it offers us an opportunity, great opportunity to rethinking and have a new start. And we have to get that and look at that as a new perspective to the future. A huge amount of government resources to support the economy recovery in these occasions put aside the sustainability of investment models and allow us to create a new decision-making process. That's what we are doing here in Portugal. We are creating a new decision-making process with these new instruments that allow us to look at the environment and to the social aspects of the companies that we are supporting. Also, this new paradigm that allow us to shift the requirements and the combinations and flexibilize a more comprehensive approach of a new mindset that we have, not also as Banco Português de Fomento, but also the government, the companies, and also the Bank of Portugal, that is our that is our regulator. We are all talking about this, and we have also here in Europe, as you know, the Commission that is also aware and discussing with us these problems. So BPF here in Portugal is a promotional bank, so it's a government tool, and as a government tool is pursuing the environment goals and allow all the companies to drive to a transformation of the economy. For this reason, innovation projects, including digitalization and green finance, are among our strategic priorities. So, as regarding ESG, I can say that BPF and we are working ESG very, very strongly in BPF. We are looking at ESG in 6 key challenges that we are trying to address, and that's something that we try to input in our teams. We, first of all, we striking the right balance. So we try to anticipating adequately the relevant risks of ESG. It's very difficult, and we had a lot of discussions, but this is something that we have to do in the first time. It's the starting point to any successful ESG approach. Second, we try to translate the ESG goals and strategy into our organization and our ecosystem. Now we are not just one company, we are 6 companies. So we have to discuss this among our ecosystem, our clients, the government, the regulator, and integrate ESG in all the creditor cycle. When I talk about credit, I also talk about guarantees. It's the same. It's very important that the ESG strategy is included in all this, the credit investment cycle. We have seen what we see is that once the investor has understand what is ESGs, the issue to focus on the issues that he has to focus is the question is of how and where to address then remain. The first goal is to adapt the stakeholders management and spreading ESG knowledge in-house. That's the more this is very this has been very very difficult to address. We have training the bank teams and our stakeholders on the effective ESG engagement with a diversity of companies. We try to address that with due diligence phases, even during post-investment phase and with reporting checklists. All of these create the opportunity to grow inside the company, inside BPF, and with the relations between BPF teams and our clients. Our full goal is to collecting and management and using ESG data for risk modeling. We are collecting data and processing data and integrating ESG data in our risk model. That's something that we discussed with our regulator, because we have to do, in the end of the year, we have to do a risk assessment for ESG, and the information and the data the information that we collect, it's very, 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 very hard. And what the regulator, when the regulator look at this, it's very challenging. And that leaves us to the delivery and the communication of ESG commitments. That's something that we are dealing with the Commission. Every financial institution in Portugal and in the world, in a way or another, needs at one point to show that are taken into account ESG risks, and how they are managing the ESG risks and the ESG opportunities. So regarding ESG and what we are doing, that's mainly what we try to do inside BPF. I just want to take 1 minute to talk about our about guarantees and the expectation of the regulating our regulator here in Portugal regarding regarding guarantees. We have been talking during the COVID crisis in the not a monthly basis, but at a seminal basis with our regulator, is looking very, very careful for our portfolio. We increase the Portuguese guarantee scheme increased by 6 our portfolio. We have a portfolio 6 times bigger than before the crisis, and that's why we are. That's why we have this conversation with the regulator. At this point, we are looking at the companies and trying to move on to a different type of products in terms, and our goal is to equilibrate the balance sheet of our companies. We are now putting in force a lot of products, a lot of capital products to allow the companies to have a more equilibrated balance sheet. That's what we see by this point of the pandemic crisis, is that the companies increase a lot their loans in their balance sheet, so the portfolio, their balance sheet, it's not equilibrated, and we are trying that they reach the capital ratios that they have before the crisis. I think it's very important to manage, and that's something that we that are in guarantee schemes to understand that at a certain point we have to look at our clients, our SMEs, in several ways. For not to have an equilibrium between the products that we deliver to our economies. Thank you.
Thank you very much, Beatrice. It is very interesting, and in particular all those 6 means and to reach ESG criteria. well, we are progressing in the same direction in,
Yeah.
in BP France, of course. But yeah, I think the way you envisage it is very, very interesting. And now we are moving to Jordan. I'm very pleased to welcome Mohamed Al Jafari, the General Director of Jordan Loan Guarantee Corporation. Hello, Mohamed. Very pleased to see you.
Hello.
And,
thank you very much. Thank you for moderating this session. And actually, this is the first time to be a speaker in a session, the only male speaker. So glad to be with you, Virginie, Beatrice, and Athena as well. And I think the topic of this particular session is very important, talking about the future of the loan guarantee schemes. And I think the points mentioned about the rebound and the recovery needs to be handled carefully. Because what I see these days that we have some sort of two-speed recovery. We notice that many of the advanced economies are really registering high level of economic growth. But on the other side, many of other developing countries are moving on a much slower pace of recovery. The same thing goes to the developing countries. And if we want to zoom zoom in on the Mediterranean case, countries in the North Africa and Middle East region, again, we see a different form of two-speed recovery. With the increased level of oil prices, the oil producing countries will see a faster than expected economic growth. But for the oil importing countries like Jordan, Egypt, Tunisia, and other countries in the region, the increased oil prices will affect negatively the recovery and the speed of the recovery. So the future and the prospectus ahead of us is really challenging, and we need to be very careful. It's really very hard to generalize when we talk about the future and the speed of recovery over the coming couple of years. Another important issue that I want really to raise up here with respect to the economic growth and the effectiveness of different policy measures implemented, and the level of effect it has in the economic activity. It is very important to mention that the developed nation, advanced economies, they had implemented a lot of or several expansionary policy tools, talking monetary policy tools or fiscal policy tools. Unfortunately, small economies, like the case of Jordan and similar small economies, don't have that level of fiscal space to adopt expansionary economic measures that will really help them for achieving a quick and speedy recovery. But unfortunately, and this is really the irony here, that the cost of the expansionary policy measures, everybody is paying for that. So when the inflation, and we see the signs of inflation started to appear clearly over the fourth quarter of 2021, but this inflationary pressure will affect everybody. So we weren't in a position really to adopt economic measures sufficient enough to deal with the crisis. But when it comes to the cost of the implemented policy measures by the advanced economy, we will share the cost for them with them, and particularly the increased prices. And I don't really believe that the inflation that we're seeing these days is transitory in nature. I see the coming period will reflect higher and higher level of inflation, because not only because of the disruption in the supply chain, but also because of the structural change in the demand and the other temporary factors affecting the economic sector. Talking about the loan guarantees and what could be done given these challenges ahead of us, I believe that the loan guarantee schemes have played very important role, and it has been clearly reflected that the importance of the loan guarantee schemes as important de-risking, risk-sharing mechanism will be much in need in the coming period over the recovery phase than what is expected or what has been the case before the recovery. So the winding down of the different policy tools and the changes implemented in the loan guarantee schemes need to be kept there, if not advanced further, because the recovery in many countries will be very painful and very slow. So we need to continue supporting the SMEs over the coming recovery period. Many of the changes has taken place in the design of the loan guarantee products and in the delivery model. Many of the loan guarantee institutions have increased the coverage level, have reduced the premium level, have shifted to the higher level of delegation, have shifted toward a portfolio approach rather than case-by-case approach. All of these changes need to be enhanced further to make sure that we help better the SMEs over the recovery period. These changes were implemented over a short period of time, given the unprecedented challenges that all economies have faced, but they have proved to be very successful and need to be enhanced further going forward. Now, what do we need over the coming period? I think we need to advance further the development and the improvement that we do in the delivery model and the operational models that we have implemented. We need to maintain our products more and more attractive. We need to play the expected economic role, and to develop certain KPIs related to the social and economic impact away from the standard outreach indicators when we talk about the KPIs related to the different loan guarantee schemes. I think for small economies, for loan guarantee schemes in emerging economies, more support is needed from the donors going forward to increase the capital base and the ability to increase the level of leverage and the overall outreach and economic and social impact. Higher level of cooperation is more needed these days and over the coming days than what we were in need before the crisis, to learn from the experiences from different loan guarantees systems worldwide, because we have learned a lot over the pandemic, and we have to share the experience that we have learned going forward. And I think the EMGN is a beautiful platform to learn from each other and to make sure that whatever reforms and changes we implement are based on other beautiful experiences that have worked somewhere else. The issue of the counter guarantee fund is more and more important these days, because many of the loan guarantee schemes have faced the difficulty of the limited capital base, the limited ability for improving the level of leverage and the level of outreach and serving the underserved or the unserved segment of the SMEs in these economies. So in short, the recovery is going to be slow. This is what I see, is going to be slower in certain small economies. The loan guarantee schemes needs to meet higher level of expected demand, and we should not at any point look at the loan guarantee tools and the products as counter-cyclical product. They are needed to meet the slow economic growth. They're needed all times to improve the overall level of financial inclusion and to improve the access of finance for SMEs over tough times, over recovery times, and over the growth stages that we have. We need to look at the issue of the green and the climate change carefully these days. But when we talk about the green economy and the climate change, we need to be fair. Many of the donors ask developing economies to adopt certain measures in line with the international let's see, convention about the need to pay more attention to green economy and the climate change. However, we need to be fair. What caused this damage to the climate and who was behind these challenges that we're facing with respect to the green economy is the rich economies, but it's not fair to ask the poor developing economies to pay more attention to climate change and to be more green in their different policies. So this is my intervention today, and I would like to thank you again for giving me the opportunity. And I see Pietro is joining the discussion now, and I'm no longer the only male speaker in this session. Thank you very much for giving me the opportunity, and best regards to all.
Thank you very much, Mohammed. Yes, indeed, it was worth listening to you, as always. I will now give the floor to a new member, Athina Shatsipiano. She is the CEO and President of the Board of Directors of the Hellenic Development Bank, and she is the CEO since March 2020. And since her arrival, she restructured the HDB, and she has handled a very great COVID, a great number and amount of COVID tools to face the crisis in collaboration with the Greek state. And so I will let you, Athina, talk to us about your vision on the future on the ESG approach and your relationship with your regulator, the Ministry of Finance, Ministry of Economy, sorry.
Economy, yeah.
The floor is yours, Athina.
Thank you very much for the invitation. Thank you, Virginie, for assisting us in this transformation process that has been quite intense, I may say. And I'm very glad that it's my first participation in EMGN, and hopefully we will continue in the very near future towards more similar organizations and meetings. I don't know if I can share something. I'm working from home because we have a very heavy snow in Greece, an unbelievable snow. Let me share the screen to see. Well, actually I can't see it now in my screen. Anyway, it is really impressive. Schools are closed, companies are also closed, and we had some internet issues. I hope it will not continue. Let me start with our business model and how we have been in this journey. HDB, Hellenic Development Bank, is the national promotional institution, the only national promotional institution in Greece, authorized in providing leverage. And as most of promotional institutions, we are 100% owned by Hellenic Republic. And we are the contributors to the driving forces of the Greek enterprises as a pillar of growth of the national economy. Our role, and I think is quite similar of what has been said, is to minimize potential deficiencies and remove bottlenecks, such as regional imbalanced growth that is noticed across Europe and the world. We are focusing on minimizing the waste of entrepreneurial resources and underinvestment. We want to support SMEs and address issues such as the lack of knowledge sometimes with regards to financial options. We encourage and train potential entrepreneurs to set up new projects. We have started undertaking economic and technical research, conducting surveys and feasibility studies. And primarily, we anticipate forthcoming needs in order to support a proactive strategy in policy making. Last but not least, we want to fortify equity participation, thus developing a form of relationship banking. Our vision is to be the key development institution, a multilateral development bank serving Greek enterprises' needs to innovate and succeed, fostering fair, inclusive, and sustainable growth. And our mission is to facilitate access to finance for Greek enterprises, create value for our shareholders and employees, and to generate positive economic, social, and environmental benefits. For us, as mentioned, 2020 was a decisive year since we implemented the most fundamental transformation in our bank. We focused on our internal processes and culture. We profoundly restructured our business units and set very ambitious financial targets due to the pandemic as well. We have developed a deeper sense of purpose that guided our strategic decisions and shaped the workplace culture. And we've repositioned the core business and overcome organizational inertia with an enormous appetite for the detailed drive, that sense of urgency to make that purpose come alive. And we did that with a continuous view on the broader picture, with proximity with all stakeholders, with positive psychology and a more inclusive, empowering culture. Our business model included organization of the bank operating process, working methods in each operating unit, what we call re-engineering in corporate. We create a culture and philosophy redefining our corporate identity. What you see as our branding is actually a rebranding. We've changed in the bank's operating structures in terms of size, a drastic upsizing, and in terms of organizational chart and governance. We've created and we actually shared best practices from institutions such as EIF, EIB, BPI, creating operating models of structures, implementing a change control mechanism, evaluating our new structures constantly, and designing a targeted and innovative product agenda. In other words, we supported Greece recovery with the development of financial tools. Three main axes on those financial instruments that were used, and we will continue to use them as these are the pillars of our growth model, is senior loans, mezzanine loans, and capped portfolio guarantees. Our guarantee scheme in Greece, it has been reshaped and was launched in June 2020, less than 3 months after the pandemic. And it has been launched together with a co-financing scheme that we called TEPIH. Both products had a substantial impact in the market, providing liquidity to Greek companies with preferential terms, both of them. And due to increased demand, there were subsequent calls for both products. When we took the management in end of February 2020, we had under management less than 300 million euro, and the loans approved during the pandemic are exceeding 9 billion currently. So the upsizing was very drastic. Our flagship product is COVID Enterprise Guarantee Fund, capped portfolio facility, has a similar design as COSME of EIF, with a guarantee rate of 80% per loan, do distinct sub-portfolios, one directed to SMEs with a cap rate of 40%, and one directed for mid-cap large companies with a cap rate of 30%. Our second product is a co-financing scheme and has a 40% participation by the fund and 60% by the bank. We considered our guarantee schemes are very, very successful for several reasons that I will try to share with you. We know that a credit guarantee system must operate within the existing and unique, sometimes financial environment of the country, not as a cure-all for everything that hinders credit intermediation channels. Our guarantee scheme supported a quick economic recovery by complementing the private financial markets and preventing a credit crunch during COVID-19 crisis. What we've used it as a safety net for the lost turnover during pandemic. And the design of that was based on a cost-benefit analysis with isometric and balanced distribution of financial risk. That's why if you do the maths, you see that almost the financial risk is split in three criteria. We also considered other factors that influence the utilization of credit guarantees, such as the increase of lending, the default rate, the maximum guarantee amount, the duration, which is critical, the eligibility, and in our case, this was part of the scheme of Europe that was scheduled under COVID, and primarily of the supply and demand. That was the response of Hellenic Development Bank to COVID-19. Why? Because HDB, as a pillar of development and growth, acts and counteracts its counter-cycle role in order to ease financing and liquidity constraints and fill the gaps in the Greek financial architecture. Through the collective efforts of the Greek government and HDB, we managed to facilitate the access to finance to tackle the deteriorating operating cash flows. That was the main objective, and address short-term liquidity shortages to avoid widespread insolvencies. That was also very critical in Greece and a particular concern. What we also see as our pride is that we created by having a clause of non-firing, we've created additional 15,600 new jobs positions in Greek economy. And according to the financial institutions, they has been noticed for the first time after 9 years, an 8.3% increase in credit in Greece. So, as already said, 2020 was a significant turning point for HDB and its operations. We were called with an existing capacity of less than 50 officers to develop within a very short time schemes and financial instruments to tackle the to address the safety net to COVID-19 pandemic. And we may say that HDB in 2020 thrived. It was for us a record-breaking year with the highest revenue in the bank's history, since we managed to consolidate and extend our position, even given the difficult market environment and the negative impact of coronavirus in 2020. So this is the what. It is important though to address the how. The how was that we wanted to contribute to a GDP growth that is currently 6.2 billion, to provide leverage. These are the GVA analysis that we've conducted of more than 2 to GDP, and to track the figures that says that in 2020 we have 10 times more loans from the 5 years of 2014, 2019, and 4 times more loans from the decade of 2010 to 2019. All in all, by 31st of December, we had under management 28,000 VAT code loans amounting to 6.6 billion euros, and they were addressed primarily to SMEs. And by 2021, this has been increased to 34,000 companies and circa 9 billion euros. This has been noticed in all surveillance reports for Greece of the Commission, where the majority of the credit expansion is driven by the products of HDB. And the value that has been approved is analyzed in several products that are that could be summarized as co-financing and guarantee schemes. In 2021, having this journey and let's say knowing that we will need in the future to address a more regional and a more clustering approach, we have introduced the first regional fund in an area called West Macedonia. That is an area that has very low GDP per capita. And we have a second capped guarantee fund for SMEs addressed to public work contractors. At the end of 2021, it was our first attempt to enter what we call the new technology, and by introducing an audiovisual production guarantee fund that addresses not only to audiovisual productions, but also to gaming. And in that sense, we are tackling directly the new generation. 2022 just started with new challenges and development of new tools, and as already addressed by both Portugal and Jordan. And this was the introduction of Vision-E. We have in our pipeline a green fund co-financing scheme for a budget of 400 million, a digitalization fund, a growth co-investment fund that will try to tackle one major need for the Greek entrepreneurship, the M&A. We are already launched, we are next week launching agro micro loans. And we have let's say, very ambitious product designed together with BPI as consulting, an innovation guarantee fund. In that sense, our investment strategy for 2022 is thematic and regional. We have, let's say, not only used our previous experience, but also we have used some strategic partnership with big houses such as Oliver Wyman and other strategy houses, so as to tackle the market failure and design and formulate products that are reducing regional imbalances and formulate right products for a diverse financial market. In HDB, we have a dedicated innovation unit because we think that this is our main, let's say, big weapon for the future, aiming at building up an operating model to support all stages of SMEs evolution and extroversion, providing financial support, loans, equity, guarantees, repayment, holidays, grants, and third-party finance, that cover the whole value chain, starting from R&D, IPR, prototyping, and all kinds of other needs.
Athena, we are short of time. Could you
Yes, I'm
conclude
summarizing.
Excuse me. Yeah, thank you.
And as well as the non-financial support that is equally important. InnoAgora, powered by HDB, is our next important task. And of course, as already said, and I think that we will have some time to discuss in the second round, ESG criteria that are now incorporated in our eligibility criteria. And by saying that, we want to see HDB as consulting, as business partners, and we want to act very active. We want to act very positively in the future to overcome any other constraints. Thank you.
Thank you very much, Athena. This is the figures are very impressive. The changes of the structure at the same time as the booming of the activity is an incredible work you've done with your team. It's yeah, very, very impressed. And we are again sorry, we are a bit short with time, but we definitely want to hear Pietro Calice, who is a senior financial sector expert in the finance competitiveness and innovation global practice in the World Bank. Well, I think most people in this in this event know of Pietro Calice, who's a great expert in grantees and schemes in particular. And I'm very impatient to hear you talk to us about green guarantees and how CGS play a strong role in the green loan guarantees. And if you could at the same time answer somehow Mohammed's question about the differences between rich countries and countries which have a slower development, and is there a subject that you have thought of? If so, I would be very interested in your view on the subject. Thank you very much.
Thank you, Virginie. I hope you can hear me fine. Good morning, good afternoon, good evening, everyone, and thanks for inviting me to this event. Let me try to share my screen because I prepared a few slides. There you go. Can you see? Can you see my screen? Okay.
Not yet.
Okay. Yeah, there is some delay.
Yes.
Okay. Great.
Yes.
Okay. So I'll try to be brief and try to address in my intervention today is whether and how credit guarantee schemes can play a role in this. That reducing the environmental footprint of SMEs is going to be a crucial factor in the success of a green transition to net zero is without doubt. If individually SMEs may not be largest contributors to emissions, but in aggregate, they are even more in every economy, advanced and less advanced, are an important, if not fundamental, component of the economy, and of employment. But the green transition also presents business opportunities for SMEs, in piloting new technologies, in selling new products and services that are equally important for the ecological transition. Because of their size, always face two key issues. And today we are discussing the second issue, the issue of finance. And we know that guarantee schemes are traditionally policy tools to ease the problem of access to finance for SMEs, and they can play an important role in mobilizing green finance for SMEs. But and this is the key point that I'd like to share with you today, is that like any other financial institution, they should systematically strategies, operations, and programs. And there are four key actions that credit guarantee schemes can take. First is to commit to climate strategies, which means basically building climate change considerations into their strategic direction, vision, mandate, corporate governance, etc. Two is managing climate-related risks. We all know by now that climate change is now considered an important source of financial risks for the financial sector. Number three, they need to promote climate-smart objectives, which means, in essence, working with lenders and stakeholders more generally to create opportunities for new products, new instruments, and green investment. And last but not least, the fourth point is to build the framework to account for climate performance. Let me briefly elaborate on these 4 points. So when it comes to committing to climate strategies, it's important that guarantee schemes are increasingly seen formally as an important pillar of any government's policy framework to green their economies. It will be important for guarantee schemes to adopt clear and stable green mandates to support national transition strategies. At the same time, embedding climate considerations into their strategies, ensuring also, as previous panelists mentioned, that they have sufficient capital, and finally building an effective governance and management structure that can really lead from the top. When it comes to managing risks, I mean, this is, of course, the bread and butter of any financial institution. But climate change, introduces a new dimension and more complexity. And I think it's important that guarantee schemes start identifying the key source of physical and transition, assessing the materiality of those risks, and then, of course, monitoring and mitigating climate-related risks through risk reduction strategies, brown activities, not only promoting or integrate both borrowers and lenders, factor in climate considerations into the products. There's a lot of innovation out there in loans, transition loans, and others. Guarantee schemes may need to develop new products to address the issue of both adaptation finance, like, for example, Japan has been doing for some time with disaster risk guarantees, but also for, of course, mitigation finance like, for example, equity guarantees to support, startups and investment in new green tech, including guarantee coverage and others, pricing with eligibility criteria, the products, and the risk appetite. And finally, it's important that guarantee schemes set up or integrate, existing monitoring and evaluation framework to measure and report on their climate performance, working with other stakeholders on closing any residual data gaps that exist. And of course, gradually learn on how to disclose the carbon footprint of their guarantee portfolio and aligning with international and national guidance on disclosure. Let me conclude with what we at the World Bank are doing to support this agenda. At the global level, as many of you know, because they are part of this process, we are reconvening the task force of experts that in 2015 developed the principles for the design of guarantee schemes, which offers some sort of a framework to guide the operations of guarantee schemes, greening credit guarantee schemes along the broad lines that I developed earlier in my presentation. At the regional level, we have started collaborating with regional associations to identify and quantify climate risks in the portfolio of credit guarantee schemes. And finally, at the country level, we are engaging in a policy dialogue with governments and stakeholders on the green transition. Let me conclude with the question that Virginie was asking, echoing Mohamed's intervention. It's undoubtedly that challenges and issues in emerging and developing economies are more daunting, are more difficult than in advanced economies for the many reasons that we all know. But when it comes to the climate transition, I think this is really a code red for humanity. If I may quote the Secretary General of the UN when he made a reference to the latest report that showed that we might be already a bit late, in containing the rise of temperature. So this is really a global problem. It's a global public good, and I think we collectively, as part of the international community, we need to work, together towards that objective. This is one element of the overall agenda. There are many others. There are political economy considerations. Of course, it's a very complex issue. But again, the point I'm trying to make is that regardless of the differences, there is no time to waste and advance on this important agenda. Let me stop there, and I'm happy to take any follow-up questions. Thank you very much. Over.
Thank you very much, Pietro. It was very clear. Unfortunately, there was sometimes where the sound was not so good, but thanks for the presentation. It was we could follow very well. I hope you will be able to share the presentation with all the members, as it is indeed very, very interesting. I have one question to ask the panelists before closing the session. I will ask that question first with Beatrice, and if Athena can add a few words afterwards, very quickly. The question is about the evolution of the model of the guarantee schemes in the context of short resources, and this is linked with another question, and this is why I asked the question to you regarding the fact that the interest of merging the National Promotional Bank with the guarantee scheme. So Beatrice, if you could very, very quickly answer that
I
question.
hope that you are listening, because I have a very strong sound in my background. Sorry. Yeah, we moved to so I will be very quickly. We moved to a promotional bank because during the crisis, we saw that it will be very useful to the government, to us also, that are promoting instruments in delivering government instruments, financial instruments to the economy, to have just one institution. We can we can have the same risk model that is very good in terms of what is the policy in terms of policy making, and it is also to have just one institution to carry out financial development and promotional activities on the promotional basis. It's more efficient to have 3 or 4. That was one of the points. The other point, it's that now we operate guarantees, debt, and equity activities. So we have a potential larger impact in the economy and a more comprehensive view of the economy and the market failures. We can improve guarantees, guarantees one-to-one or portfolio guarantees, because we have the same comprehensive of the companies and of the SMEs, and we are just one talking to the SMEs. So I think that is in terms of Portugal, and we are not a very large country, but moving to have just one institution, like you, Virginie, also have in France, and that's what happens in other countries. It's very useful for the government, for ourselves, and mainly for the whole economy and for the SMEs. Thank you.
Thank you very much, Beatrice. Indeed, many CGS are doing the same move. It's the case in Tunisia, in Morocco. CGC is also moving towards that direction. And Athena, do you have something to add, because you also have done this move in Greece?
Yes, I fully agree to what Beatrice said, and it's actually also the model of HDB. So we are also providing guarantee grants, loans. We are now building a mezzanine facility. We participate to Equifund. In reality, we have to, in order to slice and dice those kind of activities, we have to see the size of the market. In Greece, the size of the performing loans is circa 60 billion. So that size is not, let's say, allowing a further diversification with regards to what is promotional policy making, what is guarantee schemes and different institutions and management entities, etc. So in our terms, we have also our affiliate company, our subsidiary that is doing only venture capital and equity. We are covering the totality of the economy, and we act, let's say, as the only let's say, policy making, as well as addressing market failures towards this direction. Thank you.
Thank you, Athena. I will give back the floor, but because we are very late, and I'm sorry for that. But I guess it was worth it. I mean, I thank you very much, and I thank very much the speakers for the very good information we got, and I guess we also have a lot of subjects for our next meetings. Thank you very much.
Thank you. Thank you. Bye-bye.
Bye-bye.
Bye-bye. Thank you all.
Thank you all.
Hi, Antoine. Should we start the next session?
Yes, 2 minutes.
Okay.
Thank you. We can start.
Thank you, Antoine. Good afternoon, everybody. I'm very happy to moderate this session on the use of risk-sharing arrangement by the financial sector during and post-COVID-19. We have a great lineup of panelists today, starting with May Abu-Naga, who is the first sub-governor of the Central Bank of Egypt, Guy Selbert, who is the president of the European Association of Guaranty Institutions, IEMed. And then we have José Fernando Figueiredo, who is the chairman of the Sociedade de Garantia Mútua Portugal. Also, he is the founding president of the GNGI and special honorary chairman of the IEMed. And Yasser Barnier, who is the chief of the financial market division of the Arab Monetary Fund. So with this great lineup of panelists, we can have a discussion on the use of risk sharing mechanisms, particularly in the during COVID and post-COVID recovery. So as was mentioned today by practically all the speakers, the role of credit guarantees was essential to implement the policy mitigation actions to combat the COVID-19 pandemic and also limit the socioeconomic disastrous effects on households and MSMEs. Today, nobody is talking about the contagion effect if there wouldn't have been a mitigator that could help the economies, and particularly specific sectors that have been really affected by the closures, the lockdown, and also the loss of productivity. And this is, we can see it now in many developed countries. So obviously the risks of the COVID-19 pandemic are not over, and we will see the materialization of those risks in this year and the next years to come. Now, if we look at the balance sheets of credit guarantees in the developed countries and in developing countries, they have grown very fast with exposures that might end up non-performing. Obviously, the asset quality is deteriorating, and this will put further pressure on the credit guarantee schemes and also on the banking sector overall. This will also increase the potential need for government support to avoid an upcoming economic and financial crisis. Now, this government support is not equivalent in all countries. There are some countries that have ample fiscal space, like, for example, in some of the EU countries. In the Mediterranean countries, unfortunately, this fiscal space is not available. So it means that many countries are piling up stock of debt, which will have implications, particularly negative implications, if the growth rate will not follow in the years to come. Now, this increases, what we call the increases in the balance sheet of the credit guarantee schemes, will call the need for additional mechanisms, like, for example, counter guarantee schemes and other sophisticated risk management techniques that ought to be organized or recognized, by the regulatory framework. And this is the Basel framework, particularly now that the Basel Committee is reviewing its evaluation of the Basel Accord. And it could be that these guarantee schemes and counter guarantee schemes will be put in the forefront in the debate, particularly if we are going into a post-recovery of COVID-19 period, which will necessitate the continuous involvement of those instruments. Now I would like to turn to the panelists to ask each one of them, in the order I mentioned previously, to share their experiences during COVID and the plans for the post-COVID recovery, and then we can have the discussion in this session. So I would like to start with the case of Egypt and what has the Central Bank of Egypt achieved and done, and what is their view about the risk situation in the country and the use of guarantee schemes and eventually their position on the counter guarantee scheme. Please, May Abu Naga, the floor is yours.
Thank you so much, Reem. Can you hear me?
Yes.
Thank you very much. Good afternoon to everyone. First, I would like to express my gratitude for being part of this panel and discussing this among my fellow panelists. I would also like to thank the Euro-Mediterranean Guarantee Network and the Credit Guarantee Company of Egypt for organizing this very important conference and discussing those key issues and development. Actually, the world has become acutely aware of the fact that SMEs are the engine of economic development as well as the engine for achieving sustainable development goals. And in Egypt, supporting SMEs stands at the heart of our national vision, Egypt 2030. And at the Central Bank of Egypt, SME is one of our most important strategic objectives, given their importance in job creation and its impact on social and economic welfare of the society. And if you allow me to go even more micro, I have a personal conviction that credit guarantees are the main catalyst for credit growth and access to finance. Maybe Ms. Nagla Baha will witness that and confirm how far back we were very convinced with the important role of credit guarantees. In our case, CGC has always played a very imperative role in assisting the Egyptian banking sector to reach the underserved and the vulnerable segments of the society. This in turn has contributed vastly to the MSME growth in Egypt. And stemming from this belief, the Central Bank of Egypt has put a lot of focus in the past couple of years on developing and strengthening the role of CGC. Initially, before CGC restructuring, before we started the restructuring of CGC, the company's activities focused mainly on MSMEs, providing credit guarantees of about 3 billion Egyptian pounds to cover credit facility of about 7 billion Egyptian pounds, and that was done on a case-by-case guarantee basis. Following the structuring process, which mainly focused on several points, for one, changing the management and separating the executive and the non-executive role. Also, what was very important, to conduct a comprehensive assessment and due diligence analysis of the organization and providing a clear roadmap that can equip the company to achieve its mission. Also strengthening the company's shareholding structure and the board formation. We also appointed our deputy governor as the non-executive chairman of CGC. Also revamping the company's operational model with full support from different CBE sectors. We also encouraged and support at CGC in the development of new guarantee schemes that met the market needs. In that sense, CGC introduced to the market in 2019 the portfolio guarantee scheme. This scheme has proven very effective and has helped the banks manage their portfolios, especially during COVID. So even though the portfolio guarantee scheme was introduced since 2019, yet it really took off post-COVID. So the banks realized that it is very important to bundle portfolios of similar risks and get the guarantee on that portfolio rather than operating on a case-by-case basis. Moreover, the Central Bank of Egypt issued regulations providing special treatment for CGC guarantees and providing advantages to banks dealing with the guarantee by decreasing their provisioning and CAR requirements. Those regulations actually act as a base for encouraging banks to deal with marginalized and underserved segments. And we did not stop it there. CBE has also issued a pledge or a guarantee of about 31 billion Egyptian pounds to the credit guarantee company to support business in various segments. So to that end, the impact of CGC restructuring has proven quite substantial. In 2019 and 16, as I mentioned earlier, CGC operated with an outstanding credit guarantee of about 3 billion, covering 7 billion credit facilities. And in December 2021, CGC was operating with an outstanding credit guarantees of about 120 billion, covering almost 178 billion Egyptian pounds in credit facilities. Furthermore, CGC resources for guarantees stand now at about 33 billion, so about 2 are of their own resources, and 31 billion are from the central bank resources to issue against them counter guarantees. Thus far, banks' MSME loan portfolios grew exponentially from December 2015 to September 2020. Portfolios of growth amounted to 288 billion, representing a growth rate of an exceptional 230%. I would like to stop at this, and maybe we can discuss a bit further in the discussion the post-COVID changes that were made and the impact that the CGC took in the Egyptian banking sector.
Thank you very much. May I have a few questions before I go to the next speaker? Which are the main sectors? Do you have strategic sectors that you are focusing on in your support or intervention support mechanisms? And my second question is what are the risk factors that you see in the next, say, 1 year?
So if you look at the normal ESG from an ESG perspective, usually credit guarantees focus on MSME. But in our case, we realized very early on that CGC can support other sectors which are quite vulnerable and even more vulnerable than the MSMEs. So even large corporates post-COVID will require this support. So we think that tourism, for example, sector in Egypt is one sector that is vulnerable to a lot of external shocks and would require the credit guarantee support. Some maybe agricultural in an agricultural sector would also require the credit guarantee. As it stands, we have issued several initiatives and discussing the guarantee serving segments of the society that even reach all the way up to large corporates. We realized that large corporates have to be solid, they have to be well, to be able to serve their value chain, which are at the end the MSMEs. And relating to the risks that we perceive in the future, I think with the COVID repercussions and the recession that is taking place, the value chain problems that are happening worldwide, definitely we will be seeing an increase in non-performing loans. That is why it is very important for the sovereign guarantee to step in and during those times be able to support the markets, support the economy, and preserve it from those risks. Thank you.
Thank you very much, May, for your answers. And let me also emphasize that the growth rate in Egypt was positive during the COVID.
Yes, thank you.
Which also gives you a bit more space on the fiscal side to perhaps use such government or sovereign guarantees to support different sectors in the economy, including the large corporations. Thank you very much for this. I would like to move to Guy Selbert, who is the president of ICM. Please, Guy, the floor is yours.
Yeah, thank you a lot, Rim Ayadi. Dear colleagues and friends, good afternoon. First of all, many thanks for having me in this panel. I'm really honored to be invited to speak at your distinguished annual conference today. Thank you, Nagla. And I'm very happy to transmit you greetings from all the members from all over Europe. After a short introduction of AECM, for those who might not know us yet, I would like to give you in the next few minutes an overview of risk-sharing arrangements and, of course, recent developments in the European guarantee sector. Antoine is so nice that he will just follow me in this presentation with the slides. So you can see on this map that the AECM has about 48 members in 31 European countries. You know that AECM is the European Association of Guarantee Institutions. It comes from French, Association Européenne du Cautionnement, which derives the initialisms AECM, and it was founded in 1992 already. So we will have our 30th birthday this year. The office is in Brussels, and you see that we are very proud. This is why we just marked it in bold, that EMGN is one of the preferred partners, one of the 3 partners. And you know that last year, when we further strengthened our cooperation through this mutual partnership, we started this cooperation with EMGN. The mission of AECM is threefold. First, the political representation of its members towards the EU institutions, the EIB group and the OECD. And of course, second, the organization of exchange of best practices among the members and partners. And third, the promotion of the guarantee instrument within Europe. So next slide, you can see that the risk sharing in a guarantee SME financing project is usually based on 4 pillars. First of all, the entrepreneur is expected to contribute to the financing of the project via it's his own funds. A predefined part of the loan is then covered by the guarantee issued by a guarantee institution, but usually a part of the loan remains at the risk of the financing bank. The fourth actor is then the public sector that reinsures the guarantee via a counter guarantee, and the proportion of each pillar depends on the individual guarantee case. So next slide, we will just focus on these 4 pillars. So let's start with the first one, with the public counter guarantee. This counter guarantee can have very different forms. It can be capped or an uncapped counter guarantee. It can be an explicitly issued counter guarantee, or it can be implicated by the public nature of the shareholdership of the guarantee institution. Yes, whereas some counter guarantors fully provision their counter guarantees, others just reserve about 20 or 40% of the funds. The latter is the case, for example, for the new investment program of the EU, the so-called InvestEU. Another feature is the price. In some cases, the counter guarantee is for free. This was the case for the capped COSME guarantee, and for example, is the case for the German structure. Unfortunately, it will not be the case for the future financial instrument for InvestEU. Of course, counter guarantees also differ by coverage. The former EU program COSME, for example, covered 50%. This was topped up to 80% now during the COVID crisis. And the coverage of the counter guarantee is restricted by EU state aid law, normally. It may not exceed 80%, but during the crisis, coverage rates of 90 or now even 100% were permitted. So the counter guarantor, of course, sets the conditions for the deployment of the guarantees insured by its counter guarantee. And the counter guarantees are granted by different government levels, starting from a municipal, from local level. The German guarantee system that I also represent is an example for the combination of a regional and a national counter guarantee. The Pan-European Guarantee Fund, EGF, was set up in response to the COVID crisis on the initiative of the EIB group. The fund is counter-guaranteed by contributions of participating EU countries, so 22 from 27 EU countries decided to participate, and it was implemented by the EIB group. And last but not least, and certainly I think the most important one, is the EU counter-guarantee for some members, which was formerly distributed by the programs COSME, Ufm, and other names. Since 2021, those programs were replaced by InvestEU, the implementation on which is unfortunately still in preparation due to delays, and we are really hoping that it will start soon. So next slide, please. Risk sharing in the guarantee system. You can just see on this page the distribution of AECM members according to the type of counter guarantees they are using. So you can just see that due to the shareholder structure, AECM members are very heterogeneous, and there are countries where there are several different members operating in the same field. On the next slide, you can see that the counter guarantee coverage that I just presented is usually topped up by the guarantee institution. I would like to mention a particular case. For example, in France, there is the French guarantee institution Socama that receives 50% counter guarantee from the EIB group, and it hands this guarantee as a 100% guarantee to its clients. However, only to those who get a loan from a Banque Populaire, who is the exclusive financing partner of the Socama, belonging to the same group. You'll see with this example that it is a very various structure in Europe, and this is just how, the reason why these instruments are so powerful, because sometimes there is just more than one player in country. We collect data on the guarantee coverage granted by our members, and you can see that at end 2020, the maximum coverage rate was on average 84%. So you can see, and it's not surprisingly, that during the COVID crisis, the coverage rates increased significantly. taking account, of course, the difficult situation of the SMEs. So next slide, we will go further and discuss the risk sharing in the guarantee system, because the financing bank, of course, receives a guarantee either in the form of an individual guarantee covering a specific final beneficiary or in form of a portfolio guarantee. In the latter case, the financing bank builds up a portfolio of SME financing under this guarantee. But of course, in order to prevent moral hazard, parts of the risk needs to remain in the books of the house bank. In case of default, the guarantee institution usually intervenes on a pro rata basis. The financing bank does not only benefit from the guarantee in form of risk reduction, but also in form of regulatory relief. This has been quite important. And of course, it's more the case with uncapped guarantees. Depending on the individual case of cooperation with the guarantee institution, loan conditions might be constrained by the guarantees. So let's see on the next slide, the end of the chain. It's the fourth one of this fourth pillar. We arrive at the level of the entrepreneur, who of course remains in any case liable for its business activity. He or she is usually required to contribute own funds to his business project. Importantly, the risk sharing only works for viable firms. That is why the guarantee institution is very careful not to finance so-called zombie firms. The risk of zombie financing was very prominent in the public debate during the second half, especially of the COVID crisis, when many observers warned that the massive public support would allow already failed firms to survive for a bit longer at the expense of taxpayers. While guarantee institutions were always sure about which companies they support, scientific proof currently arise confirming that the fear of zombie financing was not justified. So let's see about the COVID measures. Let us have a short look about the vast range of COVID measures adopted by the ACM members. In the case of most guarantee institutions, these measures were backed up by the respective national or regional government or by European Union funds. These measures include the increase of the guarantee capacity, an increase of the coverage rate, moratoria, reduction of fees, fast-track procedures, and many more. I would like to emphasize those measures just marked in bold, since they had a direct impact on the risk-sharing arrangement. The increase of coverage rate was, of course, only possible thanks to an increase of the counter-guarantee coverage. And this was possible just because the temporary framework had been implemented and loosened EU state aid rules. If you are interested in more details about the COVID measures, we just prepared a brochure on this topic. You will find it on the website of the ACM. So let's see how this affected the statistics, because there is a statistic effect of the COVID measures, as you can see here. According to our scorebook survey at the second half of 2020, ACM members taken as a whole experienced a real explosion of guarantee volumes caused by the rollout of the extensive support programs for SMEs. ACM member organizations altogether were supporting SMEs with a total amount of 330 billion euro of guarantees in 2020. Compared to the year 2019, this represents an increase of almost 200%. And this increase is much bigger, as you can see, than during the first year of the financial crisis. The development of the number of SME beneficiaries impressively shows the anti-cyclical role of guarantee institutions. During the world financial crisis, the SME portfolio of ACM members just doubled over 3 years. And in 2020, it increased already in 1 year of 81%. Impressive number is that in the EU and the UK, 18% of all SMEs were supported by AECM members at the end of 2020. There are also more information in our statistical yearbook. So the impact is very important when we're just talking about budgetary issues. In order to be able to rely on the 4 pillars, the risk-sharing arrangement that I just presented before, the governments need to be convinced to contribute their share. So they will, of course, only do so if they expect the guarantee activity to provide a net benefit to the economy as a whole. That is why many guarantee institutions are conducting or mandating impact studies that scientifically prove the financial and the economical additionality of their activity. So credit guarantee institutions do not only play an indispensable counter-cyclical role in crisis times, as already mentioned, but they also play an important role as a policy instrument to overcome market failures in the area of SME finance in normal times. So on this slide, I would just show you or mention 3 examples of recent impact studies. And I will just focus on the most favorable one because it's the study, the recent one we mandated in Germany by the German Ministry of Economics on the activity of the German guarantee banks. And they found out that the benefit of the guarantee system is 17 times higher than the cost that it incurs. So I think this is a very impressive number. For a vaster overview of the existing impact studies, I would invite you to check our website. So now let me thank you again for having me invited to speak at your conference, for being, of course, an active partner of AECM and for your kind attention. Shukran, and I'm looking forward to the discussion. Thank you.
Thank you very much, Guy, for this extensive presentation that gives a clear view on the role of credit guarantees during this pandemic. And we can clearly see that there has been a massive increase of your activities, of course, the balance sheet of your members. I wanted, since you gave us a very interesting, but then of course, on average view on the European credit guarantee scheme. So how do you see the breakdown between countries in the north and countries in the south? This is my first question. And my second question is, how do you see the concentration of the credit guarantees in terms of the size of the companies, and in terms of the sectors that have been affected during the pandemic? And my third question would be, how do you see the risks going forward? In which sectors? And also, how do you see the lifting out, or the impact of lifting out of the policy measures, I would say government-led measures, to regain, I would say, normal conditions of the economy without such a huge intervention by the government? And of course, this would also trigger some thinking on probably that we need to have this government support as a new strategy for supporting the economy from a public-private partnership perspective. So this is also something that we have been discussing. We have been discussing at, for example, the advisory board of the European Banking Authority, in which I act as a chair. Which means that most probably to keep the economy floating, we need to recognize that probably the public support is needed for more than what has been anticipated going forward. So this is the few questions for you, Guy, please.
Yes, thanks a lot. So I just, hope I got all your questions. So concerning the business activities of our members, it's quite difficult just to say that there are more activity in the south and less in the north. I think it's a bit depending on the COVID strategy, on the COVID, yes, how the country has been affected by COVID and how the measures has been implemented. So there are differences. I would say in the South, it has been a very good deployment. There has been a good use of EU programs, which has been established for the COVID measures. You can see that in the North, some countries were had a different COVID strategy, just not only restricting too much the companies, and if the companies are not restricted in that way, of course they do not need help in that way, as we had, for example, in Spain or in France, where there has been a very high grade of closure of the companies and so on. So I think we will just focus on the statistics. The statistics 21 is not finished yet, but I think you can just later on check if there is a kind of yes, different line between the North and the South, but I didn't observe that. The concentration, of course, is depending on the help, the support the national yes, country just established. So in our case, due to state aid, it's just related on the SME definition of the European Commission. So 50 million euro, 250 employees. But I would say that the help in general just focus on the very small companies. So we do not have within our statistics the differentiation of the target group, but for several countries it will be very small countries, very small companies. So the highest risk I would see in the future is that the business models are not working anymore like they did just before the breakout of the COVID crisis. So we need to just rearrange or redefine the business models of the companies. So for restarting, there is help needed, of course. We need to more to play support on digitization again, because we all know that for those companies who digitized in a perfect manner, they just didn't, they weren't that much affected as other companies. So of course, the sector we really helped most were the service sector, all the sector which has been closed or where lockdowns occurred. So this is just significant. We can see that the industry was not that affected, the industry, but service sector, tourism, and all services related to contact. So this is just what we can see in our figures. So the lifting out, I would say it would be very helpful now to establish programs for transformation of the industry, because we are now entering in a new phase of rebuilding industry for sustainability, for digitization. And as we just learned that the guarantee instrument were just, yes, the best instrument for this crisis, I would say it will be the best instrument to transform the industry as a whole. So I think this is just what we need to do. We need to develop programs fitting those needs, and just combining with what I have said at the end with the positive effect of the guarantee, with the impact studies. I think it will help decision makers to, yes, to really make good decisions towards guarantees in a yes, post-COVID time.
Thank you, Dee. One last question for you, because you inspired me to, I cannot wait for the end of the session on this. Do you see a role for counter guarantee. Sorry. For counter guarantee in the transformation strategy you are mentioning at a national level and at the regional level?
Yes, I really see that because, as you know, in Germany, we have a new government. And if you just read the strategy, the new strategy, the program of the new government, then it's just full of transformation of just turning the industry in a green industry. And so there is really a lot of work for the financial sector. And this financial challenge needs to be assured by our guarantees, because of course there is a risk in time in how is the payback period of those transformation projects. So we are just developing at the moment a kind of study about the specific needs for transformation, because we don't have any experience. Normally we always finance transformation like structural change, startups, transition of companies, but it has never been so challenging like it is at the moment. So you have to see that in Germany, in the southern part of Germany where I come from, the automotive sector is very strong. And this is just, tremendous work to reinvent this sector as a green sector. And so there is a lot of activity now developing new programs. And I think we will learn a lot in the next months to come. And it would be good to share those experiences.
Thank you very much, Guy, for your insights. And I think there is a lot to share and to learn from your experiences, the experiences of all your members. So I would like to give straight the floor to Jose Fernando.
Hi, Lynn. Thank you very much to everyone. Well, first of all, thank you very much for the invitation again. I can consider myself a member of the team and of the house. So, I mean, I was, of course, involved in the creation of this institution, and of course, to Ufm, to Roger, to Haida, to Nagla, and the colleagues and friends and all the teams. Congratulations for being able to put it in place and make it working even in this very challenging environment. I mean, 2 years working even without being able to meet physically is a great job. So congrats again. And of course, to salute to the other colleagues from the MENA region, also especially a special salute, if you allow me, to my chairman, to Guy, that of course made my life absolutely easier, because, you know, I don't even go to present my slides because they were basically doubling what he just said. So, and with your questions after the presentation, you made it even easier, because now I have nothing more to say. So I can just say hello to everyone and see you later. But okay, I'll try to sum up what I was going to present you, and eventually take here say a more, let's say, a perspective, a more political, if you want, in the sense of policy perspective here and strategic perspective, not as technical and as my slides were prepared to present initially. So, I mean, trying to go back to what was said during the whole morning. I mean, we all know that these guarantee schemes are, of course, risk sharing and risk mitigator instruments that are absolutely crucial and have proved to be absolutely crucial for the development of economies by allowing the small businesses getting access to credit financing that otherwise in many situations would not get. And of course, this is particularly important in the presence of crisis. I mean, as of course, anti-cyclical tools that can allow the banking system and the financial system in general to share risks and to keep lending money that otherwise would not be able to do. Of course, in the COVID crisis, I mean, also just reinforced this. And of course, because of the dimension of the crisis, because of the need to be super fast answering, the states increased their involvement in the process. So as we know, the states, the governments are involved in the credit guarantee risk sharing mechanisms in two possible ways, or they are the owners of the credit institutions themselves, I mean, public guarantee funds or branches or arms of the so-called promotional banks or development banks, which was the case of some of the examples we saw in the previous panel. Other times the states don't have the ownership of the equity of the credit guarantees, but they assume a part of the risk in their operations by providing what we call a counter guarantee, so a risk sharing mechanism. And this can be done at the regional level, at national level, or at pan-national level, which is the case of certain jurisdictions and certain areas of the globe. I mean, for example, in Europe, we have the European Investment Fund that provides a counter guarantee coverage and sometimes a co-guarantee coverage to many of the European guarantee institutions, and particularly to those that are not public, of course. So it must be said that it is not, definitely is not a global move that all the credit guarantee institutions are going to be merged into development banks. That's not the case at all. I mean, there are, even in the countries that were mentioned as examples in the previous panel, like France, I mean, there are two credit guarantee schemes that are independent from BPI France, despite the fact that BPI France is doing a great job. But that is the same in Portugal. We still have 4 mutual guarantee societies, the same in Spain or in Italy or in Germany. And as far as I know, Guy, you can help me with that, but it is not supposed that the German guarantee banks are all going to be merged into KfW. So let's not go out of this. Let's not go out of this annual conference of the EMGN with the idea that we are all going to disappear in the middle of promotional banks. This is not the case. So going back to the sum up I was trying to do. Of course, I mean, we all know, and it was mentioned in the different panels and by the different speakers, that we really had to move very fast during the pandemic. We had to increase largely our guarantee volumes, not in all the countries, but in almost all the countries. So on average, the industry around the world really verified and observed a huge increase in the volumes, and with a much larger presence of counter guarantee from the state or from a coverage from the taxpayers, let's call it like this, than it is usual, and it was even observed in the past financial crisis. So, and of course, and we did it with the guarantee schemes, no matter what is the, let's say, the juridical structure we are having, being independent companies or being, as I said, branches of promotional banks. We all did it very fast. We all proved to be very effective. As Mohammed mentioned, we all proved to be very effective while doing this. And the initial reaction was absolutely fantastic, and the figures can prove it. But we did it also with the capacity of making a difference. I mean, not being just people throwing guarantees into the field. We did it by throwing guarantees, but also throwing some capacity to still measure the risks adequately for the situation, and still trying to balance our exposures to avoid, of course, massive losses later on, and to avoid a capital crunch or a crisis on our balance sheets afterwards. So now, in the aftermath of the crisis, of course, we will have to reinvent ourselves, as it was also pointed by the colleagues. And I would say that we need to do that because, I mean, on one hand, of course, we will face necessarily, because our portfolios increased so much, at least for most of us, that we will face an increase in the so-called non-performing loans, meaning that the guarantees associated to these non-performing loans that were issued by ourselves will necessarily increase. But I should emphasize that for us that are in the industry, for us that still manage guarantee institutions or branches of promotional banks that deliver guarantees, we should bear in mind that this is absolutely normal. I mean, it should not be expected that we suddenly multiply our portfolios by 2, 3, 4, 10 times, 17 times, like in some parts of the world, and then all the NPLs would stay the same or at the same levels. This is one important note. The second important note is also from a central bank's perspective or from the government's perspective, so the ones that manage the taxpayers' pockets. I must say, and I've been telling this to some of those institutions I have the chance to talk to, that they also should not pretend to be now very much surprised that suddenly we will be asking them to pay a part of the collaterals that they promised us they would pay in order to use our networks and our capacities to deliver guarantees and credits to the economy. It should be always beared in mind that actually it was the credit institutions, the credit guarantee institutions, teams, it was our operational capacity that allowed most of the states to put all these guarantees and the loans that are associated in place. I mean, it was not, in 90% of the cases, it was not the ministries or the government departments that did it. No, it was our services, our teams that did it. Of course, covered by, in most of the cases, covered by special programs that were launched by the governments. But I must remember that when a government said that they were launching 1 billion euros, whatever, $2 billion, 10 billion euros programs to save the economy, actually the minister or the government was not doing the operational work. It was our teams that did it, of course, and we had signed agreements with the government saying in most of the cases that, okay, we will issue 1 billion euros of loans with an 80% or 90% coverage of a guarantee from one of these institutions. And this guarantee sometimes is counter-guaranteed by a public counter-guarantee mechanism, others is not. But then the state had to set aside enough money to pay the potential losses on these massive increases of the business. And sometimes some of them, now that things are starting to recover or to move in a different way, they are trying to see if they forget that they promised the money to our balance sheets. All right, so I know this is not very politically correct, but this is the fact that some of us are observing. So we should remember, all of them, that they should not first be very much surprised or pretend to be surprised, and second, the money should be there to cover our balance sheets, to assume the increase in the losses that was expected to occur. Because the alternative, as it was also mentioned by the colleagues, had been to have a massive amount of bankruptcies, a massive increase in the unemployment, and of course, a big loss of assets that should be deteriorated by the fact that they were closed, shut down. So what we did in most of the cases without guarantees, as we know, was to keep, sometimes, even if the companies were not working, they were still open and prepared to fresh start as soon as the COVID or the pandemic situation allowed it, which was the case in many of us. So what now? But now in the aftermath, and bearing all these things in mind, we, of course, will have to reinvent ourselves, and we should be capable to do it. So we have, as I was mentioning, this NPL increase. We have, of course, the advent of digitization that was mentioned. We have the advent of the circular economy sinking, so all the sustainability, social and government issues. So this means that we need to deal with the green economy issues that were also mentioned. We need to deal with the social conscience and a new way to incorporate some obligations that in the old times really were not in our minds, in a better way and in a proper way. And of course, and as Guy just mentioned, and this implies necessarily a modification and reinvention, let's call it like this, of our business models. And which this means, very, very briefly, we need to have a much faster delivery process. We need to use technology to support it, but not only technology. We have to have more products diverse products for different applications. But we still have to keep the proximity to our final undertakers, meaning the micro and the small businesses, because if we lose that, we will definitely be just one more financial tool. I mean, which means that we can be substituted by someone else that does it in a faster or in a let's say fancier way one day. Okay, and of course to do all these, and bearing in mind that we have all the portfolios that grew during the crisis, and of course that we will have to have more capital. Okay, and more capital means that we will have, or we can increase our own resources by our own means. I mean, the mutuals probably will have to call some money from the founders, from the members, from the mutual members. The others will have to call some additional money from their shareholders. But of course, we will have to take hand of what Guy very well explained, these risk-sharing mechanisms. And these risk-sharing mechanisms will allow us to leverage our capacity, will allow us to continue having some policy measures, as very well questioned, Guy. I mean, we need the states to be prepared to keep risk sharing with us, for us to be playing the role of sustaining the economies, of helping them to take off coming out of the crisis, because otherwise it may not be possible. And of course, recycle our capital base in an environment that of increasing of NPLs is not an easy one, of course, and politically can be of discussion. So we need also to strive to really fight for public coverage, for political coverage, and also to have a special understanding from the regulators that this is nothing to do with our daily activities. No one just multiplies the balance sheet by 10 or the off balance sheet portfolio by 10 and then suddenly stays the same. So we need to tell the regulators that we need to have time to do it and to keep our balance sheets correctly balanced. So now focus in the last 2 minutes in the counter guarantees. I was asked to, and I mean, I was the founder of the Portuguese Counter Guarantee Fund and of the Portuguese Counter Guarantee Mechanism, as well as of all the Portuguese guarantee institutions, so I know them well. But when we founded this counter guarantee mechanism, that is very similar to the Spanish one, the only difference is that we have an independent fund, so a pocket of money, of public money. The Spanish have an ongoing company, but it's exactly the same concept. We created the counter guarantee mechanism because in Portugal we had a private-public partnership, so we had a mutual system of credit guarantee institutions, and of course the majority of the capital of the guarantee institutions is private. Is still the case today. I'm still sharing a credit guarantee institution that is mutual, where the companies have 80% of the share capital, and then we have the banks and the state, and the Banco Português de Fomento was the biggest shareholder, but still very minority shareholder, which means that we needed to have a risk-sharing mechanism that could do basically three things. That first, and obviously, that could leverage our risk-taking capacity. So, I mean, we, like all the mainly private guarantee schemes, we don't have a big capital basis, which means that by having an automatic counter guarantee from the state, this means that we can leverage, we can increase our capacity of doing guarantees, because a part of the risk is taken by the state, so our capital base is necessarily increases for the same level of coverage. And then the second main advantage of having these counter guarantees is that from the state perspective, they could launch and develop public policies that could be similarly taken by all the guarantee institutions, despite the fact they were in the north or in the center or in the south of the country. They were for agriculture or for agribusiness, or they were fishery, or they were industrial companies, or or tourism companies, because they can use these as a tool to promote, let's say, a certain standardization of procedures, a certain control on the way things were developed from the public side perspectives. And of course, they could also gather information from a single source for all the analysis of the public policy impacts. And this is the Portuguese Country Guarantee Fund as all the information of the portfolios of all the Portuguese guarantee institutions. And last but not least, this was in the specific case of Portugal, we had the capacity to also serve as a kind of a first level of supervision, of regulation of the system. I mean, we could create, and then we used the company that was managing this fund, which was SPGM, now was one of the three institutions that was merged into the Portuguese Promotional Bank. But of course, but SPGM was a back office service center to all the mutual guarantee societies, of course, with the advantage of reducing costs and so on. So, and now, how could this be translated and, of course, analyzed for a situation of the one like the MENA region? In my perspective, what we should do is that, of course, there are completely different issues here, because there are different legal structures, different currency structures, different juridical and probably corporate governance situations. But despite of all these differences, I think there is a common root that, in my perspective, could really call for a big advantage of having one, let's say, one of these pan-national institutions that could help the region guarantee institutions to have some additional coverage and to increase their capacity of working. Of course, this can be done probably step by step, eventually starting by having different compartments according to the GDP situation, to the evolution, even to the fiscal capacity of the different governments to invest some money in this fund. But I believe that if it is properly set up, if the government structure is properly designed, if the different currency questions is properly protected, by agreements, of course, of risk coverage, I strongly believe that, despite the fact that this will not work as easy as the European Investment Fund, because of course it's inside the European Union, inside with many countries that use the euro, but still this could be of really, really, really big importance for the region. So for now, these are the notes. I would be very much open to questions. Thank you very much, Mrs. Moderator. Thank you.
Thank you, Jose. I see the time. We are 1:16 minutes and our time is off. And also I would like to mention that the representative of the Arab Monetary Fund could not join us. But then again, based on the discussion we had, we can see clearly that the counter guarantee schemes are needed as an essential pillar for transformation of the overall business models of the sector, obviously in close collaboration with the regulatory authorities, because in my view, not only the guarantee schemes, but also the counter guarantee schemes, not only at the national level, but also at the regional level, will be essential pillars for diversifying, transferring, and eventually better managing the risk exposures that will be brought about by the recovery process that we are going to experience in the next couple of years, hopefully. And then to rebuild the economy based on the new challenges or also opportunities brought about by the green transition, the circular economy, also overall sustainability, integrating the ESG factors into the business models and ensuring that building the economic development going forward, for example, in the MENA region, would be much more sustainable and take into account these ESG factors, which are, well, for me, this is our next challenge for the rebuilding and the transformation of the economy, and also at the same time build better, build greener, build more inclusive, build more transparent, and trying to use as much as possible the government resources, particularly for the countries that are going to go further into indebted situations, to ensure that these resources are efficiently used for the benefit of peace and prosperity, particularly in a region that is suffering quite a large uncertainties and tensions that we can see in our region. I think with this, I thank you very much for this very interesting discussion, and we'll continue obviously the thinking and trying to build better post recovery COVID-19, and hopefully this will happen. And then I hand over to Nagla for the conclusion. Please, Nagla.
Would like to start actually by thanking everybody, all participants, speakers, panelists, discussants, members, so everybody, and we've been through like a wow tour of looking at the whole risks that we are all facing, no matter where we are placed, in this map of the world. We are all facing almost the same, if not really the same challenges, that we are heading for, so there is no doubt about what we are heading for. And there is another confirmation that it is not an easy journey for recovery. It's another confirmation of the role of the guarantee schemes. It's another confirmation that to do this role and to be able to play it properly, we have to be ready for that. And ready, it means that we have to act spontaneously. And now, maybe now late, but we have to move fast in preparing ourselves to carry the expected responsibility. There is no doubt about the challenges that we're all talking about, and we're not going to repeat it, but the stress on being ready for that by our new business model, by transforming ourselves into another thing. As Guy said, we're all facing new. The whole thing is new to us, Again, this is another confirmation of the importance of the networks. Again, another confirmation of this kind of interactions, that we're having together, and it never failed, to serve our needs. I actually am a kind of abuser at that level. So anytime I have a question, I go to everybody, I get the whole answers, I take it, I examine it, I go with another question. So it's a non-stop here, but this is what we need. It's a unique industry. We learn from each other. We need each other. The very important point, these networks are crucial. And this is actually to say that really, I'm so happy and proud that we were able together, with the whole team, it's really not only the members, of course, in supporting that, the IEMed, in assisting in presenting EMEA and the coordination unit, the Ufm presenting the umbrella. And of course, on top of all of that, GIZ, and to Antoine, actually, in particular, because we drove the guy crazy, we've been going into a plan that is, okay, we're going to meet in Egypt, no, in Cairo, no, we're going to meet in Luxor, no, we're going to have no, now virtual. And he was accommodating and adjusting. So a big clap, actually, for Antoine for the excellent job he did, and the patience, in absorbing all our crazy ideas and everything. GIZ, actually, I have to thank the team of the GIZ, headed by Haider. He'd been a real supporter in making this EMGN network to continue through their support at different levels, providing all these technical courses, the academy courses, the whole support of everybody. And for UFM, of course, in believing, because I know UFM, it took them like 15 years, and they almost, I don't know, 13, 15 years, they never say this thing will not fly. It flied. And exactly, you know, going through this critical timing. I can't believe it. Our last meeting was November, I think, or something like that here in Cairo. And this is in 2019, and immediately the pandemic came on board, and we did everything within the whole framework of the pandemic, but we succeeded, and we were able, you know, to affect even our business. It's just a last say, you know, that I would like to incorporate regarding, because the IMF representative is not on board, but we are working with the IMF, which is the Arab Monetary Fund, in examining the establishment of a counter guarantee, you know, for the region. And IMF are very much interested. It's a platform, or it is the real official body where central banks and Ministry of Finance are presented over there. So it's the, I think it is the right platform through which we can establish this regional counter guarantee. Yes, yes, to say yes, everybody, yeah, this counter guarantee, regional or maybe national, you know, needed. If even we'll start the regional and encourage the national afterwards, but definitely we need that expansion in our portfolios is magnificent. You know, we reach it to 40 times leverages and 30 something leverages, and we all know what's coming. Support is needed. Standardized approach to the region is needed. You know, so through this platform, or through this counter guarantee, actually, we hope that we will be able to do that. The interest, the enthusiasm, and even we took some serious steps at that level, where EMGN started at the early beginning. And this is another form of cooperation between all bodies. We started at the early beginning examining the counter guarantee. We came out with the main mandate of it. We're starting now a feasibility study of it. AMF is on board. The GIZ is supporting this feasibility study. So we're moving fast about that. And the interest of the AMF is very clear. I think they are also collecting or confirming the interest of the national governments presented by central banks or Ministry of Finance, which I'm sure it's on board, you know, and as Reem mentioned, you know, this participation, and Jose mentioned, you know, of the national government and their representation. Yes, I think they are there, they are on board, they are interested. And this will take us, you know, to a good thing. So I hope by 2022, you know, we will be able to close it by a number of things, having a label for EMGN, moving at level of EMGN, having the counter guarantee serving all the region, interacting with our colleagues from Europe, you know, and the Mediterranean to understand and learn from your experience at the level of EIF or European Central Bank, you know, emerging all of this together to come out with where we are. The only thing I think, actually, the last thing I'll say is just the presentation of women in this day, you know, because this annual meeting this time had the significant presentation of women at different levels, researchers, regulators, heads of guarantees, and name it, you know. So in reality, I'm pleased about that. I don't think Rogelio meant it or deliberately, but it came by, you know, coincident, but I'm happy for this coincidence, you know, and I'm happy for having it. Thank you, everybody. And I think I will leave the floor to Haider, presenting GIZ, to them. Big thank you, you know, for making this thing work and go and thrive. And together we'll do more through it, inshallah. Thank you very much, all.
Thank you so much for your warm and kind words. I would also like to say thank you to all participants of today's annual conference, especially also to the EMGN members for your active participation, but also to all non-EMGN members. It was really great to see you in big numbers. And hopefully, as Nagla said, hopefully the next annual meeting we can have face-to-face and not online anymore. That would be really great. So please also allow me to say thank you to UFM, to Mr. Actually Kamal Nasser Kamal, excuse me, for actually your continued support and blessing to the EMGM network. This is really very helpful and very much appreciated. I would also like to say thank you to all speakers from all various institutions for enriching the discussion in the EMGN network and for helping to advance our understanding. So that was really great. Thank you to you, Nagla, of course, for your leadership and for your inspiration. You are like an endless source of inspiration. Please keep that spirit. That's very helpful and very needed. Thank you. And of course, also thank you to EMEA for organizing this event, having organized this event, to Antoine and to Roger, and also to EMEA. We are the 3 supporting institutions of EMGN. We are honored, actually honored to do so and to help EMGN striving and growing. And please allow me also to say it was great to see new faces and new voices from credit guarantee institutions from Turkey and Greece. That was really, really great. Thank you for your contribution. And we hope to see you, I don't know, as a member in the network, I guess, in the future. So, yeah, I think like there have been already done some high-level conclusion of today's event. Please allow me to share very brief my high-level observations. Of course, there's a need to go digital. I mean, first of all, the EMGN members already mentioned last year, there's a need to remake the business model of credit guarantee institutions. We had an academy last year actually visiting that topic, analyzing that topic, what are the building blocks of a new business models. And I think they have been mentioned again at this conference. Just to summarize, to go digital, the need to go digital, of course. Digital transformation is a topic at institutional level, at country level, everywhere. And I think with at least I'm aware of, in the EMGN network, we have Egypt and Jordan as front runners in digitalizing your operations. And I think that's inspiring also for other EMGN members. We had an academy, I think it was the first academy of the EMGN network on that topic. And later at the steering committee, at the subsequent steering committee meeting, we will also discuss about it, how to further institutionalize that support process to EMGN members. So there's a need for new products, equity guarantees, for example, but also other products, also new sectors, to identify new sectors. Climate change, green transformation is a big topic, of course. And I think that guarantees will play a big role in supporting green transformation. I think credit guarantee institutions have been in the spotlight for overcome the COVID crisis. I mean, we are still in the crisis, not overcome yet, but I think you will continuously be in the spotlight for the green transformation, because guarantee products are needed to really mobilize private capital and to help to redirect financial flows into sustainable sectors. It won't work without guarantees, I guess, to give incentives to the private sector. And a lot of thinking and innovation is needed. And I think that Guy mentioned that now also in Germany, that's for the first time to think about also like green guarantee products and to innovate around this topic. And I already want to announce that the next EMGN training academy, a 4-day training, will take part in spring on the topic of green guarantees. So we would like to invite all EMGN members to innovate around green guarantees and to come up with green products, with green guarantee products out of this training. Yeah, then the risk sharing arrangement, Nagla also mentioned it again. The regional counter guarantee scheme, also a very important instrument to help to stabilize the sector, the financial sectors in the countries, to increase inclusion, to get more MSMEs in the formal financial sector. Also mentioned by many speakers, as still, I mean, this is still the main focus of credit guarantee institutions, to include micro, small, and medium enterprises into the formal financial sector. And they are the backbone of all economies. They provide jobs and so forth. And so they need access to finance. And also, I think Maya Abunaga from the Central Bank of Egypt said there, even in the Agenda 2030, it's mentioned the role of SMEs and the role of access to finance. So that's very important. And I think that the counter guarantee, talking about green transformation, can also play an important role in mobilizing private capital to be invested in sustainable sectors. So I think there's a huge opportunities. I think green transformation does not only mean cost and risk, but also opportunities, at the other hand. So I think that counter guarantee scheme, if it will be there one day, can make a contribution to the transformation in the Arab world. Yeah, so having said that, I want to say thank you once again to all of you, and looking forward to 2022. working together with you and achieving all our wishes and ambitions and objectives. Thank you. All the best. Thank you.
Bye all. Thank you. See you soon.
Thank you.
Bye-bye.
Thank you all.
The end now. Okay. Yeah, thank you for your attention. Thank you. Bye-bye, everybody. Antoine. Yeah.
Bye. See you soon. Thank you.